Crudele here, and welcome to NinjaTrader Live.
Can't hear.
I know. I can't even believe it. I was sad you were gone, though. I missed you terribly.
Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. My mic was muted. See, 2 days gone, and look at what happens. I'm going to be getting this all day. I had it on mute because I didn't want everyone to hear me having a little snack, having an espresso before we get to the open. As usual, joining me in studio, senior market economist Tracy Shuchart, otherwise known as Shy Girl. We'll do this again. Good morning, Tracy.
Good morning. Missed you.
Thank you. And there we have Jimmy. He's got Carolina Blue back on. His hair looks really good today. You got a haircut yesterday for sure. Our senior market strategist, Jimmy Cagnina. Good morning, Jimmy.
You nailed that. I did go to the salon yesterday to get a little bit of a touch-up work here to try to catch up to you. There's no way I'm going to make it, but good to have you back. I do want to do a special shout out though. We do have Engineer Bear is in the house, long-term strong member of the NinjaTrader community. John, glad you're back, and most importantly, glad you're feeling better, man.
Oh, that's great. What a way to start off. Good to meet you, Engineer Bear. Great to have you here. Great to have everybody here in chat this morning. And, big guest today. We got a lot to talk about today. We've got big guests. We've got Santiago Funds, Brent Johnson.
Yep.
Honestly, one of my absolute favorites on Twitter. We will be putting his Twitter link out later. He is fantastic. I got a lot to talk with him about. Normally, Kane is on Wednesdays. He's not here. He's in Dubai. He's living the life, living the dream. Tweeting at all sorts of different hours. We don't know what time zone he's in. He likes that. He's a man of mystery. And in his spot today, we have ES streamer boy Leo.
Oh, yay. So I get to do crude inventories with Leo today.
He better be ready. And he better do his hair. I don't want to see him coming in with a hat this morning. He better come in. If he's going to do the morning session, I want to see Leo with his hair done. That's the way it's got to be. And he's got to do it in a British accent today. He's kind of got to do that.
I would like to see that, actually.
Yeah. Oh, he says, no hair, sorry. He says he's already in chat telling me he's not going to happen. He's lowering the bar right out of the gates. Well, a lot to talk about today. So a couple things. Overnight trade. I come in every morning. I look to see what's moving a lot. It's like my first kind of look. Gold down 0.7%, which is really probably the strongest move in any one direction overnight. You always have crypto moving quite a bit. You got Ethereum down 2.5%, but it's been on an absolute ripper. So a 2.5 move, and that is like you pulled it up on a chart. It's like that. It's a little nothing. We're past earnings. We're past Fed. We're past CPI. I talked about this before I left on Friday. It's all about tariffs now. He's going to control the news wave. That's what President Trump likes to do. What do we got news-wise?
So actually everybody was talking about the CPI this morning all over the news because it was exceedingly dull. It came in much lower than anybody had anticipated. So we had Supercore, which is what the Fed looks at, came in at 2.7%, the lowest since 2021. The index kind of was, if you looked at the internals, what the Supercore breakdown was, we kind of saw services lagging a little bit. We're seeing a little bit of weakness in the consumer as far as buying is concerned. And we saw things like gasoline and TVs down, but while we saw food still extremely inflating. So that was interesting. Anyway, with that result, normally you would think this would boost rate cuts because inflation is coming down, but instead the opposite effect happened, and we saw chances of rate cuts fall to 2 now. If you remember, it was just 4 a couple of weeks ago. So fall to 2 now because it was hopes that a recession now can be avoided. With that, we saw the dollar kind of reversed overnight. It was up on Tuesday. Now, many are saying that there was some short covering going into CPI. and then they used this opportunity to resell into the market. So that's interesting, but we're down significantly this morning in the dollar. Just a recap of Trump yesterday. Just a reminder, mid-morning, I think I posted it in the chat with Stowe. He said, buy stocks now.
Again.
And what happened in the afternoon? We had a huge rally in the afternoon. The guy is got a 3-to-3 hit ratio now.
Yeah.
Perfect.
It's incredible. We don't care about the markets. Now all we care about is the markets. This is the world we live in.
Absolutely. And then moving on to oil, we had new sanctions put on Iran shipping companies yesterday, and funding of Iran's military. We had Trump post, if Iran leadership rejects the olive branch and continues to attack their neighbors, we'll have no choice but to inflict maximum pressure. We did see increase in crude prices during that. We have pulled back a little bit today, but still elevated on risk. And that we also saw an increase in Brent call options at 95 that expire late July. Now, that doesn't necessarily, they're cheap. They're out of the money calls. They're cheap. So it doesn't mean that oil has to get to 95 necessarily for these options to make money, but interesting that traders are going long. And on the opposite end of that, we have the 40-35 put spread in October and December also saw a lot of activity. So it looks like traders are thinking prices are going to rise in the summer and fall back down into the winter.
Yeah, I mean, crude, I think, is going to be a decent trade. I've been looking at it. I talked about that low. Well, we had talked about this with Helene. It was oversold on her indicator the most. It was like a 10, she said. I remember something like that.
On DSI, yep.
Yeah, on DSI. And, like I said, I caught that whole 20 cents in the crude oil and covered it. I couldn't wait to get out of it. It was just the greatest thing ever. And it's really like $5 since then, actually more than that. It's fantastic when you see that happen. Now I'm looking to get short. It's going to go to 70. I'm kidding. I don't know what I'm doing yet. But ultimately, crude is down 1.25% today. Natural gas down 2.5%. I didn't mention those. I wanted to hear your energy stuff first. But that overnight is something also that's moving decently. But I want to get to you, Jimmy. The bond market. Bond market is becoming more and more the talk of Twitter. We got DCP Cooks, our guy who was on the show before, great, talking about how he sees 110 in the bonds coming soon, which I don't think is that big of a deal, but I think it's in terms of pricing where the bonds is trading 113 right now. But ultimately, what does that mean for rates? It means rates are going higher. And you've got, Pax talking about this key level right around, I think he once said 113, maybe 24, which is basically that yesterday morning session high, roughly. And Pax sees it going down to like the high 110s-ish, I think, as well. So interesting. Two guys I know that follow bonds very closely think that rates are going up. What does this mean? Jimmy, talk to us a little bit about bond market.
Yeah, I mean the long bond, the 30-year is really struggling. I mean, my line in the sand is a 113 handle. We're at it right now. We traded below it yesterday, and it looks like we're going to trade below it again today. Hard to tell, but we're right there. That's a really long-term area of support. You could see my chart up on the screen right now with a little bit of a rectangle there. The 110 handle, we haven't seen that since January 15th. So that would be something if we get there. I mean, we're still below in the cash market that 5% yield. We were flirting with it. We wicked up yesterday or the day before, I can't remember, to yesterday to 4.95 in the cash. I think now we're pretty close to 4.9, maybe last time I checked. So I think that 5 print on yield is going to be really, really pivotal here going forward. And it aligns with that 113 handle pretty nicely. So this is looking a little bit bearish. Stochastics, you can see, are just about in the basement right now. So it's looking a little bearish here.
And something we didn't talk about as well later today, of course, we have Jason Shapiro, crowded market report, COT data. Immediately when you pulled up your chart, I pulled up my bond chart with the COT data, which I would love for you to go over later with Jason and see his thoughts. Last time bonds commercials were this long was going back of August. right around August, September of last year, and at that point we had a decent sell-off, and we're now getting to that point where we're close. I don't think we're like in an overbought scenario in bonds, but we're getting to levels on COT data from commercials that we have not seen since then. And at that point, the market broke from there. So it's something I think I would like to hear from Jason Shapiro following Leo today at 11 o'clock. So we'll be tuned into that as well. Something I want to talk about that I think is, I think it's got to start coming into play soon, Shai. The JP Morgan collar trade. I mean, we had 58.80 short calls.
Yep.
The put spread was 52.90 to 44.60. That's a big loser. 58.80 calls that they're short, which is really interesting because Pax put this out yesterday as well, and it's something that I wrote in my morning note. Pax and I look at the opening range for the year, 59.49. I don't know where SPX is trading currently right now. I don't watch it. I watch the ES, but obviously in the vicinity of this is a big area. And he talks about this JP Morgan collar trade because I think about it in two ways. One, either they start protecting it, right, at 58.80. Do we start seeing sellers up here? Or is this all of a sudden squeeze higher because they're getting kind of run out? Do they got to buy futures?
Right. So something to definitely watch, again, because that trade is so huge.
That's what I mean. Any kind of like whispers in the macro world? Is anyone talking about it?
No, nothing, which is surprising. But nobody is talking about that. Again, this is a hedge against a long position, a long underlying position in the equities, individual stocks and ETFs and that nature. So, but really, no, I haven't seen anything or any chatter
Yeah.
yet.
Well, again, because of its size, I always think about it when we're near key strikes and we're near them.
Right.
And we're also near opening range for the year, which I think is extremely important. 59.49 is where we open the year in ES, and I think that we actually reach those targets. I know that Pax is in chat. We'll see what he says about NASDAQ. I'll when I get to Pharm later, I'll take a look at NASDAQ, but I'm really focused on S&P. We know that Kane is short, by the way. He bought puts. Yep. He's trying to, infiltrate everybody on X to get short puts. Come on. He wants it to be like Oprah. You're short, you get a short. He wants to hand out shorts. So it's one of those things where I think that this area, the momentum is so much on the bulls now. When you look at the chart on a daily, it almost looks like you want to look at it V bottom. I mean, when you go back and look, it's been forming, obviously, and I think the whole world can see it. And you get up in this area back to unchanged for the year, you wonder what happens here. I think equities get really interesting. Again, we're going to be driven by some headlines, but these prices now, I think we've gotten through the majority of what we're going to hear from the president, I think, in terms of China, right? Or do you think that there's still more? I mean, like, is this at least, when we say 90-day pause, that like, are they going to let this simmer? Or have you been hearing anything else?
No, I mean, I'm kind of the opinion that this 90-day pause is just going to keep getting kicked down the road, right? There are economists thinking that 37% is going to end up being the actual, China tariffs, but I think this is just going to keep getting kicked down the road because if we look at other trade deals that we've made, we know they take 12 to 18 months. It doesn't just happen immediately, particularly if we look at Trump's first term and that trade deal that went on took 18 months with China. And so it seems easy to me to just keep kicking that down the road a little bit. And then I want to go back to what you mentioned about this rally. What's interesting is Larry Fink was speaking in Saudi Arabia yesterday, and he noted that there's still $12 trillion in euro banks and $11 trillion in U.S. money market. So there's still a lot of money on the sidelines. They're not really, we haven't really seen institutions really participate in this rally yet.
Yeah. I mean, it goes back to I think that the bullish news out of China is now behind us. I think, like we said, we're past the latest Fed meeting. We're past CPI. We're past a lot of things. I think it does get more technical. I think more for the medium-term traders like myself. I think that a lot of that news is, you never know what they're going to say. But I mean, I think that a lot of the heavy bullishness news is somewhat behind us. I think what does get interesting is, does he start chomping at the Fed again? If all of a sudden rates start coming up, that's where I think it gets really interesting. The Fed's too late. He gets back on Powell.
He did just yesterday. As a matter of fact, it looks like he got the CPI data later because it wasn't till the afternoon he started tweeting at our Truth Social. I don't know how to say that, but he said no inflation, prices of gasoline, energy, and groceries, and practically everything else are down. The Fed must lower the rate. Europe and China have done it. What is wrong with too late, Powell?
Yeah.
So he's already did that late afternoon yesterday.
Yeah, no doubt. It's going to get, well, I mean, again, we're always tuned in, and you'll be in the chat throughout the day and the morning about any headlines as usual. Any data today before we get to Jimmy's Edge report?
Today is quiet. We have crude inventories at 10:30.
Just crude.
That's
Can be you and Leo in there.
Yep, me and Leo. We got a ton of data tomorrow. We'll go over that tomorrow morning.
All right, it's that time, everybody. It's time for Jim Cagnina and this morning's Edge report.
All right, well, let's continue with bonds since we started with it already this morning. We already talked about this area of support here at around that 113 handle. We're dipping into it for the second day in a row here. We'll see if we get some, just wick through it, or if we continue on to the downside. I do want to show some intraday levels, though, right now. I know it's kind of an immature start, low volume start across the board, actually, for most of the CME Group futures markets. But right now, we don't really have a lot of a frame around the conversation. We have that JAX 1 level right at that 113 level. That's the biggest gamma exposure level that we have. And we got to really go outside the frame to see some other levels. On the upside, we have that Mentor Q one-day max just north of that 113.16 at 113.17, 30 seconds. And then further up higher here, we have a really keen area of interest for the bulls. This R1 level at 113.22, and then previous session's highs one tick above that. So there's two areas of interest on the upside there as well. Then 114 even is a round number. It's also a target. On the downside, we have S1. All right, next to that previous session's lows. So that's at 112.19. And then that 0 DTE put support from Menthol Q right there at 112 in 16, 30 seconds. So there are targets here. We'll see if we get a stall or if we get a move. Let's shoot over to the E-mini S&P right now. And we'll see, really, I don't know if this is an ascending triangle or not. It looks like it might be. We had a double top here we broke out of. The first part of the top was May 26th. We broke out of it 2 sessions ago, but really had that confirmation candle yesterday. Today's a baby candle, a small candle so far, and a low volume morning. We have 131,000 contracts traded so far this morning. Not that hefty. All the moving averages are arcing up. We have the stochastics firmly positive here, well above the 80 threshold, and really no retracement in sight. We're only about 4.36% off the yearly highs on a futures back adjusted chart. I'm just drilling in for some targets here on the intraday. I know there's a lot of lines here. Hang on, let me stretch this thing out. We have that previous session's highs. Interestingly enough, I want to point this out. 59.27, and we heard Pharm talk about that 59.30 threshold being super important. I'm sure he's going to talk about it again today. So we didn't quite make it there. So that's kind of my line in the sand for resistance. And Deli wrote about that 59.50 level, which is gamma exposure level 3, JAX 3 up there, and then above that is the Menthol Q one day max at 59.58. And there's the R1, and we have to blow through to get there as well. The pivot on the downside, JAX 1 first and foremost is at 5,900. Let's talk about that. That's kind of framing the bottom of the conversation right now. Yeah, we had one candle close below it, but we'll see if that holds as support. And below that pivot, again, the daily pivots are kind of important to me. Right now, 58.87. And then JAX 2 is way down here at 58.75. So there's some really nice targets, gamma option exposure levels on the futures as well. Lastly, I wanted to point out, let me see if I can get this chart up here. This is just the correlation. I just want to remind everybody, the correlation between the bonds and the 30-year bond and the S&P look at how they're all angling down. I'm doing different correlations based on different lookbacks, but it's pretty much negative again, right? Especially the shorter term look back, that 8 period correlation. It's almost perfectly negatively correlated right now, which is, I guess I'd use the word normal, at least textbook, where we had a really positive state not too long ago, right? The beginning of May, we were almost positively correlated. So it's kind of back to normal. My lesson here, at least in my head, is hey, let's keep an eye on the 30-year bonds in relationship to where the stock index futures are trading. That is today's Edge Report.
Thank you, Jimmy. We are now joined by Brent Johnson, Santiago Capital, Santiago Funds on Twitter. Go and follow Brent, one of the best, because you also keep it light, my brother. That's what's great about you. You know, you have fun with it. You just don't go out there and throw a bunch of macro talk at us. You have fun with it. Good morning, and thank you for joining us.
Yeah, thanks for having me. It's fun to be here.
So last time you and I spoke, well, it was the three of us, me, you, and Tracy. We were on together for that Spaces in December, and we had talked about how this year was looking like it could be like 2022. Boy, did we look real smart at the beginning of the year, didn't we, Brent? It was really interesting. The markets were. I was referring to you on X a little bit, but now things have changed a little bit. Maybe, I don't know. What are your thoughts on this current market environment right now?
Well, I personally don't think things have changed yet. If you go back to 2022, and that's been my analog for, I think I started thinking about this in October, November timeframe, because I thought we were going to have a new regime. In 2022 was kind of a new regime with regards to interest rates. And, a lot of Trump's policies would lead to a lot of this volatility that we've seen. But again, if you go back to 2022, between January and September, there was a 25% drawdown in the S&P, but there was 3 double-digit rallies, one of them 20% before that happened. And I kind of feel like that's what's happening again. Now, I don't know if we're going to go all the way back down to the lows that we saw a month ago, but I certainly think we're going to have more volatility. And I think the current rally is probably getting a little bit long in the tooth, so to speak.
Before I bring Tracy in, I have to ask you a quick question. We talked about 30-year bonds this morning and rates starting to creep up. I'm just curious, what are your thoughts on rates right now?
In general, and I'm not playing bonds because I don't have a really strong view, but in general, I think rates stay at these levels or go higher. Unless we have some kind of a catastrophic collapse, economic, data and everything collapses and there's a flight to safety. But barring that, I think rates probably kind of bounce around in this area and maybe go a little bit higher.
Where does that leave Bessent? We know he's really focused on the 10-year analog rates. So, where does that put the Treasury?
Well, I mean, clearly it makes it challenging, right? And I think the fact that the rates go higher could then make the rates go higher, so to speak, right? Because as the rates go higher, it puts the U.S. in an even more difficult fiscal situation. But I sort of think that's the wrong question. It's not the wrong question, but it's not the full question. And what I mean by that is if U.S. rates are 5% or higher, what the heck are the rest of the world going to do? How are they going to compete with the Treasury to get financing? It's not like the U.S. is the only one in a fiscally challenging situation here. If you can buy a Treasury and get 5, 6, 7%, why would you buy a French bond? Why would you buy an Italian bond? Why would you buy a Canadian bond? And anybody who thinks that those other countries will be able to get funding while the U.S. auctions dry up, I would highly recommend they think again, because that's just not the way the system works.
So I'd like to get your thoughts on yesterday we saw a bunch of deals with Saudi Arabia, UAE, and others in the Middle East, particularly in the tech industry. My first thought was, well, the petrodollar is not dead yet, is it? So,
no. And,
what are your thoughts on all of the deals?
It's not dead yet, and it's not going to be dead for a very long time. the ties between Saudi Arabia and the United States are really, really deep. And I think a lot of people know about the dollars for oil deal, and perhaps then they know about the United States provides, essentially protection for the families in charge over there and help them develop their country. But what many people don't probably realize is that U.S. technology companies underlie their entire technology infrastructure. And MBS is trying to create, this economy of the future or country of the future or region of the future. They have great demographics. If they were to somehow break ties with the United States, how are they going to run all their technology infrastructure? Who's going to service it? Who's going to build it? Who's going to, implement all the changes? And the ties just run much deeper than you think they do. And then secondly is, even if they wanted to change and they wanted to do something differently, unseating the dollar is not really fighting the United States. It's fighting the whole world. The whole world chose to use dollars. And the dollar network is probably the biggest network in history. Everywhere in the world knows about the US dollar. And so, to unseat the dollar and saying we're going to use something else, it would kind of be like me showing up in Brazil, getting on a bus and telling everybody you can no longer speak Portuguese. You have to start speaking Russian. They'd look at me and say, what the heck are you talking about? We don't know how to speak Russian. The world doesn't know how to do business in these other currencies. And they might not trust the United States, but they trust the dollar network. And then people will say, well, yeah, but now the United States has started weaponizing the dollar and they could get their reserves stolen. Listen, that's all true. So it's kind of a dangerous world out there. But what's the alternative? They still don't know how to speak Russian. And so I think this idea that, the petrodollar is going to disappear and there's going to be this new system that just comes online and, the U.S. is out of luck. I think that's just to kind of misunderstand the current situation.
Where does gold sit with all this, Brent?
It's looking pretty good, right? It's had a heck of a year. I think it's due for a pullback, and it's had one. It's down a couple $100 from its high a couple of weeks ago. But to me, this is an environment where you just have to own gold. Now, I don't really care what the price of gold does. I don't care if it goes up $300 or it falls $800. I'm going to own it one way or the other as kind of a long-term strategic holding in a portfolio. But I think gold probably got a little bit ahead of itself. And, I don't think this is going to happen, but I would just point out that the last two times gold made a move like this, it then subsequently went into a fairly large bear market. Now, I don't think we're going into a gold bear market. But when you get a move that far, that quickly, unless the entire system comes down, which I don't think we're at the point where the whole system comes down yet, then, I think it's probably going to bounce around, at these levels for a while. I think it probably goes a little bit shorter into the summer, a little bit lower into the summer, but I'm not predicting, a crash or anything.
And so you say you're not looking at the bond market. You're not playing in that field right now. How are you positioned in this environment?
Well, so it's a good question because we are always long risk assets. We have, and we're majority long U.S. equities. We believe that if you're going to be invested, despite it being a challenging environment, the United States still offers the best opportunity on a risk-adjusted basis. And so we're long a number of equities, but we always will then control. And the reason we've owned the same equities for years, like I have positions in client accounts that have literally been in there for 15 years and we've just never sold them. And if you sell them now, then you're going to have a huge tax consequence. So what we'll do is we'll either increase or decrease exposure by using options around it. So, we've been mostly hedged and we're even net short in March and April. We are now back to being hedged. We're not net short, but we're hedged. And we've been building up our hedges as markets have rebounded. We do still have, all our clients have real estate, and so we have exposure that way. And we're playing we play volatility. I do a lot of tactical trading around kind of the core positions. In the positions that are not equity based, then we mainly have T-bills, or 2 years or less on bonds. We don't have any kind of long-term fixed income positions.
That makes sense. And then I'd like to get we're talking about China tariff situation. Everybody seems really relieved that we have yet another 90-day pause. So I kind of want to know, what are your thoughts on this tariff situation? Where do you think we'll land? What does it mean? Are we just going to keep kicking that can down the road?
Well, no, I think Trump is serious about the tariffs, and I don't think he is going to totally pivot. Now, to me, it's really interesting that no matter what happens, it's always viewed as the United States capitulating and China winning. I think if you'd have said at the beginning of the year the baseline for China tariffs was going to be 30%, people would have thought that was extremely bearish. But because it went to 145 and has now been dialed back to 30, everybody says, well, the U.S. caved. Well, China had to make a lot of concessions as well. And I think, so from a very big picture perspective, and I think it's always important to keep the big picture in view, is that there's three things that Trump wants. I think the one thing he wants more than anything in the world is to have his picture on the front page of the New York Times saying what a great president he is and what a great economy we have. The second thing he wants is his face on Mount Rushmore. And the third thing he wants is for his name to go down in all the history books as one of the greatest presidents in history, right? And I guess those last two are kind of related. But the challenge is, but what it's really about is keeping the United States as the global hegemon and not letting China usurp the United States. Well, you can't get your face on Mount Rushmore if under your administration, China goes past the United States. So that's number one. Number two, you can't get your face on the front page of the New York Times for having this great economy if China collapses. Because if China collapses, that's bad for everybody. That would cause a global crisis. So the challenge is keeping China happy or somewhat happy and functioning without letting them continue to accelerate past the United States. And that's really hard. But having said that, I think Trump is serious about kind of resetting the relationship with China and the world. He has basically thrown out the quote unquote rules-based order that was established after World War II. And now there's no longer any pretense about us doing this for the greater good. If the United States does something, it's going to be for the good of the United States. And if it's good for the rest of the world, then that's great too. But the number one thing is it's going to be good for the United States. And I don't think he's going to back down from that at all. And I think if he were to back down from that at all, he would be a political, lame duck. So I don't think this is going to end.
We've only got you left for a couple minutes left with you, Brent, and I know that you're not super technical, but we've had this big rally. We're back basically to unchanged in the year in the S&P. What do you look? Is there any key levels? Is there anything specifically? Maybe you're looking at the indexes that maybe this rally does start to slow down.
Well, so I kind of keep it pretty simple. I've got a process that I've kind of developed over the last 25 years, and I use a number of different indicators, and none of the indicators on their own are that sophisticated, and they're actually pretty simple. But if you put them together into kind of a mosaic, it starts to tell a story. So at the end of last year, everything was super bullish, right? Whether you looked at technicals, whether you looked at relative strength, whether you looked at sentiment, whether you looked at the stochastics. And so I knew that we were due for a pullback. I wasn't sure we were going to get a 25 or a 20% pullback as quickly as we did. But then in April, everything reversed. Stochastics were below 10. RSI was like at 12. The sentiment was as low as it could possibly get. And, the DSI was like 9. So you knew you were going to get a bounce. At a minimum, you were going to get a bounce. So now and I thought we would get a bounce. I didn't think it would bounce quite as far as it has. So as of last weekend, everything was kind of sitting just below kind of the 100 and 200 day moving average. Now this week it's kind of blasted through there, but now sentiment's getting pretty high again. Relative strength is kind of, I think, in the 70s. DSI is almost in the 80s. And so, and what's really interesting is now we're getting to the point where in the next couple of weeks, the 100-day moving average will probably cross over the 200-day moving average, which is oftentimes seen as a bearish signal. Plus, we're just kind of running out of good news, right? Like what else what's the next really good news that's going to propel this 5 or 10% higher? Now, I'm not going to sit here and say it can't happen. I'm just saying like a lot of the good news I think now is priced in. And so when you kind of put all that together, I just feel like it's running out of steam, and we're probably, and there's a couple of gaps that need to get filled as well. One of them's only like 3 or 4% away, and the other one's more like 10% away. But when I put all that stuff together, it tells me that we're probably due for a pullback.
Yep. Brent, this was awesome. Having you come on and talk macro and talking gaps, what's better than that on a Wednesday morning? Everybody go and follow Brent at Santiago Funds on Twitter. Check out what he's doing at Santiago Capital. It's always a pleasure to have you on the show, Brent. Thank you so much for your time today. I really, really appreciate it.
All right. Thanks for having me, guys. Good luck.
So, Shai, a couple things. This morning we talked about it, and this is what my thought process was coming into the day. First of all, I love having Brent on. I mean, because what I like about it is that he's so calm in his delivery, and and it's like he doesn't overcomplicate things. Like, is somebody as smart as he is, and who I've followed him for years, and I've had the great honor and pleasure to be able to speak with him a few times, on spaces and whatever. He doesn't lay it out in a way that's too complex. He's had, great, success in what he's doing. And so I really enjoy that, like him explaining, like, look, this is kind of how this negotiations are going with China. I thought that was just very well said. But I think when you get to running out of good news, that's what I was saying earlier. Like, basically, they're kind of done with China. Like, the good news is behind us, right? I would say capitulated on good news as far as tariffs, and sentiment is now at the highest it's been, right? Of course that's the case. So that's my initial takeaway from Brent.
Yeah, absolutely. I mean, I think it's really interesting. I was looking at his feed. He's got that SPY chart up with the gaps that he's talking about. So if you go to his feed, he does have that up there. He also has it for QQQ.
Yeah. Like I said, getting him talking technicals and macro,
right?
Great morning. Just it was really a lot of fun. Any last kind of thoughts or comments before we let you go and you go into chat and give us all of everything that's going on?
Chat. Just be nimble. Again, I want to reiterate, we have run out of, when you mentioned about tariffs, good news, we kind of had, I feel like yesterday kind of was the tech good news that helped fuel that rally. And everybody was kind of looking towards that meeting. And now that meeting's kind of over and we know all the deals that have been done, maybe, I think we do have a kind of now a lull in, what other good news could come out.
Yeah, I agree. Shai, you're the best. We'll be watching everything you post in chat. And don't forget, everybody, in the middle of the screen, as you see on NT Live, those are the major headlines that Shai puts out throughout the day. Thank you so much.
Thank you. See you in chat.
All right, chat. First of all, hit that like button and make sure you subscribe to NinjaTrader Live, please. We are at 128,000 subscribers. We're up like 16,000 since we started. We're in week 8. And, we've got Pharm in frame right now. He doesn't want to say it, but he's like, unless we get to 130,000 really soon, he's not sure he's coming back. Him and Leo, they've all turned into really hardcore streamers. So we have to make sure that we meet these metrics so these guys come back and spend time with us. So hit that like and subscribe button. Pharm, hey, good morning. How are you doing?
I'm doing well. Definitely missed the boomer bands for a couple of days. Welcome back.
I mean, really, I don't even know what I looked up. Nobody even put like a tribute to the boomer bands up there. Nothing. I mean, it was very disappointing. I figured for sure I'd come in, I was watching every morning, and see you do something with Bollinger Bands. You didn't. I mean, it is what it is. I get it. I'm not going to do volume profile when you're gone. It's the way it is.
Fair enough. It is good to have you back.
Santiago Funds. I know you follow him on X. I'm pretty sure you do. I think I've seen you comment on some of his stuff. Initial reactions, thoughts on what Brent said.
Yeah, very level head, right? There's a lot of emotions out there right now. As we came into the lows, highly emotional, and now as we come into these potential highs, very emotional. And so I think keeping a level head like that is the best way to go. In terms of Trump, yeah, I don't know. I don't know, right? A lot of people think it's full-blown capitulation. A lot of people think it's not over. And the one thing we do know about Trump with certainty is that there's no certainty in terms of what's going to happen. And so, for me, I mean, deficit cuts didn't happen at all. Looks like we're going to get tax cuts and deregulation. And if, tariffs just end up being the, LOL, China's going to buy some soybeans, then, this thing's going to run hot. But, Besson's got to be looking at him like, this isn't good, right? I mean, look at bond yields, and it's just going to get more disgusting. And even if that's not going to be Besson's most, key metric moving forward, he does not want to see the 10-year at 5.5, 6. So they're in a tough spot, and it makes me lean towards perhaps it's not over, perhaps he's not done.
Yeah, and let's get into the charts. And as I'm going to get into the charts, I'm going to look in the chat. I see some comments in there. Good morning, Merritt. Good morning. Obviously, we've got Leo coming up. Somebody saying that they guarantee that Delhi does, how many push-ups did they say? At least 40 push-ups before I get in the stream? 40 That's light destructo. I mean, you think I'm only doing 40 push-ups? Come on, man. I mean, how do you know I'm not doing curls, too? I mean, how do you know there's not a pull-up bar back here? Things they'll never know unless they come into studio. But let's get into the charts. Let's look at our boomer bands. Bonds, when I look at the bond market, again, when I see DCP and Big Brother PACs talking about bonds, and I'm always talking with them as well, it really starts to get my attention to see that it's not just me, right, looking at the 30-year going, does anybody else want to talk about this? We're at 112.25. We're near recent lows. You got 30-year highest rates we've been now in a while. You took out the swing low back over in this area right here, which I think is important. Okay, I anchored a VWAP from that swing low. We're at 2 standard deviations below that. 3 standard deviations puts us right into this low here, which comes in at 111.17. You hear PACs and everybody talking about, not everybody, PACs and DCP talking about the high 110s. PAC says 110.19. My big breakaway level will be 109.16, way down there. Bonds, they start making a new low today from yesterday. I don't see how equities don't start to pull back from that. And I know some people, it's great. I watched it yesterday with Merritt. People were talking about bonds with him. He just follows the price action, and he's not looking at the bond market. Because I'm a little bit of a wider time frame and I like to, I'm looking at big areas where I can take swing positions in. I've got unchanged in the year in the S&P at 59.49, which I'll get to. You got bonds near new lows. It starts sizing up for me for a potential short. And why wouldn't it? It's on Wednesdays where Keynes, he loves to be bearish. And I think it's aligning up to where if I start seeing bonds tick down these lows, I start buying puts. Watch how S&P does around 59.49 because I do think that spills over into the equity markets. And I use the options markets to be able to maintain that position. The next thing I look at is the S&P, which is just just bid, man. It's just a relentless bid. I don't know what to even say. When I look at this from a purely technicals perspective, 8 crossed above the 21 and 34, straight up, beautiful trend line. Bollinger Bands are opening up like a mouth. We've taken out recent swing highs. Nothing about this chart is bearish, and I mean nothing. The only thing I look at that gives me any pause is 59.49 unchanged for the year. Because opening range is such a huge part of what I look at for the year, it's worth it for me to look at. It's risk versus reward. And so this is the one thing I think that people have to understand is that when I started moving into a swing positions, the hardest thing for me was trying to paint a picture of the overall market. And even though I might have a really bullish or bearish chart, I see other things that are coming into play from other markets. I kind of paint a little bit of a picture and I go, where's the best place I can manage risk? That is where I have found success in swing trading. Not necessarily purely following technicals, on a daily chart. Because if I was just looking at the S&P, I'd be like, I really can't be short. But because unchanged for the year is there, and I have a confirmation with the bond market getting weaker, I can buy options, and I could watch that 59.49. I could withstand a little bit of volatility in this area to see how the market responds to it. And that's the way I look at it. So technically, if I'm just only looking at S&P, I'd only be looking at dips. I think 59.49 becomes extremely important. I also talked about this morning the JP Morgan collar trade short the 58.80 calls. If it starts pushing above there on SPX with some momentum, does JP come in and do anything? You know, I mean, it's such a huge trade. Does there feel like a squeeze? I'll maybe see what you think about it. And I do think that 59.49, just this area in general, should pose some resistance. And we'll see. Again, I will creep my way into an options position. I don't see myself doing outrights in this. But ultimately, 59.49 is a big line in the sand for me, really big. When you look at NASDAQ, which will load here in just a second, NASDAQ, I'm not as interested in it really at all. I think that NASDAQ, it could be almost a divergent tape where I could see NASDAQ almost staying bid and S&P getting hurt a little bit. The NASDAQ always goes more extreme. But again, when I look at it bullish, 2 standard deviations off the VWAP swing low. A 3 standard deviation comes in almost at 22,000. But I think they're hugging this 2 standard deviation above the VWAP, above the 8, 21, and 34s. I think it's grindy, choppy up here. Again, nothing about this chart screams bearish. I don't know, Pax, what is opening range for the year in NASDAQ? We'll see what he says about that. I don't follow the NASDAQ, but I know that Pax remembers every single one. And maybe you even know, Pharm. Let me see here. What was opening range for the year in the NASDAQ? 1, 2. Is that right? Yeah, right there. Opening range in the NASDAQ was 21,472 on this market. This is, I have it on the June. So right there, I mean, let me confirm that. Yeah. So another 140 points. I mean, they're both right here. Those are extremely important areas for me. But again, I'm not looking just at technicals here. I'm looking at it from the perspective of unchanged for the year is an area I could lean on. If the bond markets start pulling us down, if we start holding above opening range for the year in NASDAQ and S&P, I mean, it almost could be like a capitulation type rally where I could see it get really squeezed higher. It's why it's very hard for me to look at futures independently here. I would have to use options. And the last thing I will say, I don't use RSIs for directly getting into the market, short or long. I look at them, again, for market environment. You're at an 81.7 on an RSI, and that's in the NASDAQ. The last time I've seen an 81.7, and this is something I looked at this morning in S&P too, was July 11th of 2024. That was the stone cold high of that market. I mean, does that mean that'll happen now? No. I mean, it doesn't mean anything really. It just means that, you know, on a relative basis, at NASDAQ, S&P's at 78. Last time we were at 78 in the S&P was July 15th of 2024. What happened? It was the stone cold high of the move. So again, from my pure technicals, it's still bullish, unchanged for the year, overbought, watch the bond market. I start dipping my way into shorts. That's my market environment thoughts for the day.
Yeah.
Let's
With
see what
respect to
you
the
got,
bond
Pharm.
market, with respect to the bond market, you know, Jim mentioned that the correlation right now is negative, and it can stay that way until it's not. And we've talked about this before. Like, you know, when you see a technical break, like a major technical break in yields, then I don't think it's going to be too long before equities can't ignore it. Also, into an options expiration here, it's a fair time for equities to be able to ignore it, right? We're somewhat pinned to the upside. Gamma's positive, very supportive environment. You know, things like a little bit spiciness in that yield market can be ignored for now. So I would expect if we see just a little bit of weakness the next couple of days into Friday, and we're definitely into a huge spot, and yields continue to climb, and then that gamma comes off with options expiration, then I think, you know, maybe we finally cool off a little bit, and that would be crazy healthy. Even just coming back here to this prior 7-day consolidation would be amazingly healthy to me. So I'm definitely watching the bond market and looking for basically when equities start to care, because at some point they will, and it'll flip. And it's usually when there's a significant technical break out or breakdown in yield. So definitely watching that. I mentioned this spot to Jim yesterday, 59.17 to 35, basically. I mean, like, to me is pretty much my last line in terms of like high time frame levels. Absolutely using 47 to 50, which does have the open, the cash open, and then like even like the 59.60s, you had the extended hours open, the 6 p.m. open beginning of the year on Sunday or whatever day it was. And that was definitely relevant repeatedly. But any failure there is, to me, going to need to come back down below, this 59.17 to 59.35. So to me, this is a big spot. And, if I were to, not financial advice for you, Deli, but wait for me to stop out on my current short runners and then go ahead and enter puts. And then probably good things happen, right? So, yeah, I mean, I've been kind of fishing around for shorts here in this range. And you're right, like there's nothing bearish in price at all right now. But it is getting, very extended. And the one thing about yesterday that I didn't like to see, and this was after the open, so wasn't able to mention it on the show in the morning. It looked to me, and maybe we'll just peek at the profile real quick. I think it's a full session though. So we ended up with a P-shaped profile effectively yesterday, which basically just means you've got a paper thin profile at the lows, it rips higher into a consolidation, right? So it makes just kind of a P here. And when you see that, it's generally indicative of forced buying. And generally that's assumed to be short covering. And this is the first time that I recall, at least in a while, looking at that buying and thinking, I think that was longs capitulating in. And that's just not a fantastic look. And I could be wrong. And we could see it for multiple days in a row. But that's just kind of how I read that yesterday. And it's not a fantastic look when price is being chased in either direction. And it just kind of felt that way to me, that it was being chased. So that's definitely something I'm watching out for. That's just not a fantastic look. But I mean, again, nothing is bearish. If you look at your, weekly profile here, I'll just kind of zoom out. I mean, like we gapped well above, and Jim and I talked about this yesterday, but, overnight, we got that huge gap up on Sunday. It back tested that 7-day range like perfectly. And then we got that second round of news and kind of ripped out of there. We defended those single prints from Sunday night, and we've just continued to climb, from sort of high time frame spot to high time frame spot. But we've talked about the 59.30s since, we started the show, I think. And I said on X that I was going to sell the rip in the 59.30s. And, I made a joke that I won't repeat on this show. But yesterday that, like, I just wasn't sure I could live with myself and look at myself in the mirror if I didn't at least take a shot at it. So, I fished around some shorts here. And, this overnight low was a fantastic long. I wish I'd been awake for it. I at least would have hedged my short position there. But huge spots for me. And, so as a reminder, it's been a while since we talked about them. I've got basically 59.17-ish to 35 right here. Below, you've got 58.30s to 58.40s we'll go with, which is basically the overnight low from yesterday morning, I guess it was. And then below there, we've got, 57.25 to 57.33 half. And like we have just climbed from one to the next, and it truly has been incredible. But it does feel like it's getting to the point where a lot of the money is getting back in long. We had NAIM last week hit like 82. Now my internal NAIM is easily in the 90s. Especially after seeing the chase in yesterday. So it's definitely getting a bit stretched. You start to get the questions like, oh, is it too late to get in? Should I be swinging long from here? And when you start to get those questions, it's kind of, you kind of tend to get the feeling that like, well, it's getting a little bit stretched up here. So, again, like nothing bearish. The absolute bare minimum that sellers need to do to even pause this trend, this active uptrend, is to take out a prior day's low. And you see back here, we did that, but all it did is form a 7-day consolidation that ultimately broke to the upside. So for anything really bearish to happen, to me, we're going to need to form a multi-day balance like we did here, and then break that to the downside. But we've got so much room for a daily higher low. Like, I mean, this is basically the daily higher low here. I mean, this wasn't really, I mean, we weren't in any kind of a meaningful short-term downtrend to suggest that this is a daily higher low. This is just consolidation and balance. So, I mean, this could come down and get back test this 7-day balance. I mean, we can come all the way back down here to 5,500, 5,400, like, and it still can be reasonably constructive. And then the last thing, kind of big picture that I'm looking at, I've got the 21 EMA on here. I don't have the 200 SMA. I should put that on there, but I'm looking for the 21 EMA to cross the 200 SMA. So we've crossed the 21, price has crossed the 21 EMA, price has crossed the 200 SMA. But if you look back at 2022, that happened multiple times, but the 21 EMA never crossed the 200 SMA. And what happened this year, I mean, that's not like some blind rule that I just use on every market, but what happened this year is pretty much the day the 21 EMA crossed down the 200 SMA, things just went to hell the next day. And so I'm paying attention to see if like that's kind of going to play out the same way as 2022. And I mean, that's exactly what could happen here this week if we do get some kind of a pullback out of OPEX. So what are your thoughts?
Yeah, I mean, we didn't talk about OPEX, but I think that is something else to keep in mind as we come into the end of the week here. You know, look, everything supports the bulls from a technical standpoint on the charts. So some would say, why would anybody say that and then look to be short? It's just really for me because I can't be long and manage risk right now. That's the problem. It's not that I don't think we can't go substantially higher. I mean, I think anything is possible. But where am I wrong? Long. That's the problem. The risk is way too deep for me on the direction, on the time horizon that I trade on. It's like I cannot find a stop that I feel is good. Like I'm bullish for 200 points from here. You know what I mean? It's like we could break 150 tomorrow, and I would look at that and go, okay, maybe now I could start buying it, because from my perspective, again, I think this could help some of the shorter term traders understand that it's like, for me, it's only about where I can manage the risk. It has nothing to do, I mean, the technicals are the lead way into the trade, but it's like I can't get long here, even though the chart is bullish, because my stop is way, way too wide, which is why intraday traders, short-term strategies, great place to be. I don't do that anymore. I swing trade. So for me, 59.49 is a key spot for the year. It's opening range for the year. Just like as I want to watch right now every day, I'm watching what PAX's opening ranges are. If I find an opening range high like today or tomorrow, and I see that we're near the 59.49, I could widen my stop, and I see that that's the opening range high, I can get in short because my risk to reward is in my favor. When I don't need to go back to my charts at all, but I was looking at, just even to go back to the 8-day, is 59.66, right? I mean, and when I was looking at, I mean, that's the 8-day. It's 160 points away, 170 points away, right? Even if it did half that, the risk reward is way in my favor to be short near 59.49 for a modest pullback. So that's really the way I look at this Pharm, and I agree with you. The one thing you said is the bonds don't matter now, but at some point will they? I think they will. I just don't know when, and that's why it's hard. You have to timing this it's all about timing it. But we're at that time where every day we dig into the tape, into year charts to see, as we come into today, guide us through what you'll be looking at.
Yeah, so this spot down here is sort of the key to today, in my opinion. I've got it as 5890.25 to 5896.75. These were single prints from yesterday, where we sort of ripped higher. It's also kind of the bottom of the meat of this distribution from yesterday. And so that was, to me was the best long. So that was my planned long for today, and I was sleeping. So that's just fantastic. Very happy about that. But that was probably the best and cleanest trade that's going to happen today, was just kind of taking it back up here for a retest of yesterday's high. From there, I'm still very, very cautious of this area. We've got yesterday's high at 27, and I'm cautious up into 35, as I mentioned, like this whole 59.17 to 35 on a high time frame spot. is definitely very tricky. So I do think that for day trades, that most traders should be just purely looking for longs until that's proven wrong. Everything is constructive. You're making a point about swing trading and having, a convex trade on, specifically using options, which I agree with. If you're going to do it, it's probably going to be options. But for day traders, probably should be focused on buying dips. So, if we come up here and we sweep yesterday's high and we fail back below, and specifically if we get back below this 17s, maybe you get a rotation. I'm thinking like you see this low volume node here that's forming, and it was kind of a low volume node yesterday, kind of like this 10-ish, 59, 10-ish range. Overnight, it's just a little bit higher. Like maybe that's reactive. I'm not convinced that it will be yet. So maybe if you're short on some kind of a look above and fail of prior day high or something, you can get resolution down to, 58.90s. But I just really think most traders should be focusing on long. So then where do you buy the dip? Well, I mean, the best long that we're probably going to get was already taken. So you can look for any kind of look below and fail of the overnight low. You can look for any failure from sellers to get through this spot, to me as a long. And then, if and when, sellers are able to cap this as upside, these 58.90s, then we could see a liquidation of yesterday's chasers, right? Down to, maybe 58.75 range at least, and then yesterday's open. So that's what I'm looking at. Like this is the big spot here to manage against for bulls, the 58.90s, basically 58.90 to 58.97, we'll call it. And then bulls, I'm just taking profit up here anywhere near 59.17 and not initiating longs. Doesn't mean automatic short. I am short from 25.5 on runners. So like if they stop me out over 35, I don't care because I've already taken a bunch off, but I'll probably keep fishing personally. And I've even told my room that like focus on longs, focus on longs. But for me, that's just the mood that I'm in right now is to fish against these highs.
As usual, everyone, we do this Monday through Thursday, except when I'm not here or Pharm's not here. But we are normally here Monday through Thursday, 8:30 to 9. We have fun with it, don't we, Pharm? It's fun. We talk about little macro, following the macro guests. We get some technical, and then a couple different perspectives. Hopefully, give people an idea of what the market environment is for the day, and then of course, everyone go in and trade your strategy, and hopefully, Pharm and I give you insight into our world and how that looks. Pharm, you're the best. Make sure everyone go follow Pharm on Twitter. Check out what he's doing with his Substack. And today is Wednesday, so I will see you tomorrow, my brother.
Yes, sir. We'll see you tomorrow, Deli.
All right, next up, we have the one and only Tanya. Good morning.
Good morning, Deli. How are you? Welcome back.
I am. Thank you. It was funny yesterday. I was thinking about you. I know you love CPI day, and really kind of fell flat following CPI, didn't it? What was your trading day like yesterday?
Oh my gosh, yeah, I'm glad you asked. I mean, literally, I didn't take a trade yesterday. First time in like such a long time for CPI. I didn't take a trade. I mean, I said I wanted like a retracement. I saw that like, yeah, it was holding, bulls were holding the level where I said, yeah, this is where if we hold, we'll go higher. And I just simply didn't find an entry. And I'm totally okay with that. Now we're like kind of on like the third up day since then. Yeah, it's like you've been talking about actually day trading this price action. I've been talking to my trader friends. They're not really totally loving it. Especially when you're waking up to like gap ups or and you're already, you guessed you timed some longs, you got out of those longs. Now it's kind of like, okay, wait for the market to digest the move and kind of waiting game for me. I mean, I only took like one trade this week so far and it was like half size. And I'm kind of just waiting for a better structure and I'm okay with that. Like trading's a waiting game. It's just once I built more experience, that's what I've realized over the years. It's just like, yeah, some trades are simply not worth getting involved in because of the risk, like you were talking about earlier. It's like, where do you put your stop? Oh, it's not even worth the reward there. So then you just kind of back off, and it's okay if you kind of if you analyzed it correctly and you thought, okay, we're going to go higher, we're going to go to this high next. but you simply don't find an entry because the risk is not worth it, or it just doesn't retrace to your limit fill, that's just part of the game. You know, that's going to happen many, many times over your career. And over the years, I've like, and especially like just the past year, I've just learned more and more to accept that. And taking less trades and higher quality ones have just been much better for my game and my mental game too. So it helps you stay in the market for a longer time. You know, it's always just a longevity game. And like while your mental game is keeping your mental game sharp so that you're ready for when your best setups do happen and your confidence isn't depleted by that time, right? So yeah, I love that you asked me that. I didn't really take a trade yesterday. I saw that we ended up going higher, and I'm happy for that. But yeah, plenty of days left in my trading career, to say the least, if you think of it on a like a longevity standpoint. So no FOMO at all. And you know, we have an interesting type of structure to deal with nowadays. And it's like I think Warren Buffett says, he says the market moves the money from the impatient to the patient. So it's a good philosophy to have nowadays. So what do you think about the price action recently? You've been away.
Yeah, I mean, I think for day traders, I'm not day trading anymore. I think unless you have the discipline that you have and a lot of the other people on this network, it's been tough, right? Because it's easy to force things in this, and it's easy to fade things in this. You know, I've been down this road so many times in my career where it's like I look at like the last week or so, and it's like I've really done nothing. I haven't done anything, but I'm looking at it going, I could just see I could feel the anxiety almost in the tape, like where day traders are probably getting chopped up because, oh, this rally can't last or these things happen. It's like I wrote down, I'm like, you'll start looking at 59.49. It goes back to, I know you and Jim talked about this yesterday, and you and I have talked about this a million times. When you write things down and you have a plan, that's what creates patience. And a lot of day traders come in every day with a plan that I think they have a weak hand on, and then they don't
Yeah.
have patience because they didn't truly believe in their plan. That's the problem. But that's why we do this every day with you. You know, in the morning, it's like, what is the plan? And so I think, again, you set such a good tone for our traders every day because you come in with a plan. So let's talk about today. Let's lay it out. Let's talk about how we actually build patience through a plan.
Yeah, sure, no problem. Yeah, so here we are on the daily chart. We've had that huge gap and go on Monday, where we were gapping up already plus 3.8% or so because of the China news and reducing tariffs from like 110% to 10%, something like that, right? And then we had CPI yesterday where we, yeah, remained above yesterday's high and closed nicely above it. There's no reason really to be switching bias to bearish unless you like love pain. So, but the hard thing is being bullish. Um, it is. It's difficult to be bullish if you have all these. Yeah, we have this super strong closes on the 4 hour. We're now how many legs up? One, two, a second leg up since that gap up. That's not to say we can do a third leg up. You know, and the third up day, that's very much never out of the scope. We have plenty of like three nice up close days on the daily. Market does like to do that. So you know, marking out yesterday's high is always helpful. It looks like we've swept the high right now in the 4 hour. I always like to see the 4 hour close. I said this even yesterday, when we were around the yesterday's high, and I wanted to see the 4 hour close. It closed really nicely at 10. And you know, we had some beautiful follow through. Now, here it's actually a little bit different because, you know, it looks like we're wicking this area. So we can retrace back into this 4 hour FEG. The thing is, what kind of trade are we going to have back into this area? It's a lot of times, especially for bullish, it's like a slow grind lower into it, or it's and then, you know, especially since bullish structure is intact, the opposite trade, you know, I don't like to overstay my welcome. So if I'm going to take a short, I'm going to be careful to be just quick about it, like 10 minutes or less in that short, because I don't want to overstay my welcome in something that might change quickly because of just how overwhelmingly bullish we are. So I'll mark out this fib so far. You know, it's totally possible we retrace down into this lower fair value gap. It's in 50% here of this leg. It's not out of the question. But that being said, though, with yesterday, we were just so bullish, or the day before Monday, that we retraced into this FEG on the 4-hour in a premium, right? Didn't go into discount. And it had a really nice close, little wick there. We had that continuation, right? So it's not really out of the question that we can just come down into the first one. So I'd just be marking out these swing lows. We have London low. How are you going to react to that? I don't totally love the structure right now. I think it looks like it could continue to consolidate a little bit here or and dip lower slowly. I mean, we have this jagged high at the high and the low. So that's when I don't really love price. It's because we tend to just kind of make equal lows or generate more liquidity near those levels first before we end up taking out one side. So I mean, I'm gonna have London low marked out. Let's see here. On the 4-hour though, it's really just that's really in like an extreme premium, right? That's the first 4-hour fair value gap here, and you know that's how I'll note the closing of like the hourly candles and such to see, okay, are we getting back above that level? Is it looking extremely bullish? Or is that just a sweep, kind of like here, a sweep and then reversal for more upside, which is totally possible. It's just like, I just don't totally love the structure to be dealing with this in such a way. So let's see here on the daily for ES. Yeah, it's kind of interesting actually. We did not hit yesterday's high there, so yeah, I think we could have a little retracement here in the morning. It's not too bad, this price action actually. So there's a little divergence there. NASDAQ took out that high. ES did not. So that's kind of interesting there, I think, right with that. And then here, you can go down to the 4-hour then. So we'll see the open, you know, if we kind of start breaking some small time frame structure at the open with like a lot of displacements, then I might see a short opportunity back down into these levels here, London low. I mean, we're not close to London low right now. We're like 100 points away. So I'm kind of like imagining my head, you know, that level, we might end up coming down into it with like, and I might find a trade there in that sense that we're not so close to it, where maybe the open just dropped straight there, like we've kind of had a couple days last week. So let's see here. I do like that at least. Although then if ES takes out yesterday's high, that's gone, and you know, sidelines and just thinking, okay, we're probably gonna have a slow grind up higher again today, and it might be just a difficult trade situations, considering I do like to look for manipulation before the distribution. I like to look for a sweep on one side before going for the trade in the opposite direction. If there is no sweep, then there's not really a trade for me, and that's why kind of yesterday I didn't really take anything. So we'll end up seeing how this goes. I'll have ES right now is slightly weaker, right? Because we didn't take out that high. I'll definitely I do like the jagged ends, and we had a lower high here in like the 1 minute here on Q. Let's see the 15-minute now. Yeah, it's decent. We took out this swing low. We have this FEG now, so that's I really like this in the sense of I'm gonna watch how we react to this FEG here at the open, and if we reject and we close below another low here. If we close below this next swing low, then I'd like to look for some shorts down to London low. I could probably find a scalp or something like that there. But that being said, I'm watching this closure, the 15, it's going to close in actually in like 1 minute while we're finishing up this segment. But and then I'll watch the next 15-minute candle. If we stay within the lower half of it, it looks especially good. But if we end up closing above this area, that short idea is out the window essentially. For now, I'd like to see how we react to that level, that level for potential more downside to London low. Other than that, I'm going to be nimble and I'm going to make sure not to overstay my welcome if I do try a short. If I try a long, I need to make sure that there's at least some manipulation on the downside. I don't want to be chasing. That's the worst kind of thing, is that when I realize, okay, yeah, I don't see any good risk here. And then if you end up chasing and then take the loss, and then you realize, oh man, that was a negative R play anyway, meaning I risked more than I would have even made on that trade. That's when you start getting, losing your edge in the markets. So just got to be careful with how we react there. And if, again, like I said, if we kind of take out the high on ES, I kind of see here, actually, it's kind of weird to me. ES made this higher high here at 835 and NQ made a lower high. It's kind of weird structure. I would have preferred that ES make a lower one because we didn't take out yesterday's high and it should be weaker in that regard. So if ES just starts looking stronger this morning, it's more, like I said, we've been saying it's more of a rotational play into ES being the stronger one and rather than a reversal play. So I don't want to be hero just guessing tops. And yeah, that's that's my idea for the day. What do you think of that, Deli?
I love it. Every morning we come in with Tanya. She lays a plan out, and you can watch her stream live, obviously on Mondays, all day with NinjaTrader, and she sticks to your plan. I mean, that's the key. And the other thing, Tanya, that I talk about all the time with you in the morning, which I think is extremely important, is that you write out scenarios. You look at scenarios. And again, it comes down to the risk reward on the setup you're going to get intraday. I can't stress enough to everybody how important that is and how much we appreciate having you here with us. Again, everybody, Monday through Thursday, Tanya with us from 9 to 9:15. Make sure you subscribe to NinjaTrader Live. We need more subscribers. We need to continue to grow this channel as we have great people like Tanya, and we got Leo coming up, Pharm, everybody in here. So hit that like button for us as well, and follow Tanya on Twitter and check out what she's doing. I always have Tanya stream up along with NinjaTrader Live. She's one of our favorites. Tanya, thank you so much, and I will see you tomorrow.
All right, ciao. Have a great one.
All right, everybody, the time has come. It's Wednesday. It's not Kane. Some might say the next person might be a little better looking than Kane. I don't think he has better teeth than Kane, but Kane paid for his teeth. But we will see if Leo smiles today. We'll see how his hair looks. We'll see if he has a British accent. It's that time. It's Trade the Open with Leo.
What is going on, Deli?
What is up? Leo's in the house. How you doing, man?
Pretty good. They said that I should come in as American. So we'll see if I have any British accent at all.
He's coming in like American. We could have had that music. Nick, it took you this long to come up with this. You could have texted us. We could have had something going.
I guess we didn't plan for it.
Yeah. But we did plan for the Order Flow Labs crew to all be here. And, I'm excited to have you on during the day. You guys got the toughest slot and have done an absolutely fantastic job. Everybody, I know that the morning crews sometimes are different. Some people are trading the mornings. They only watch mornings on NinjaTrader Live. But the afternoons have been growing unbelievable. By unbelievable amounts of traders coming in and watching you guys, because you guys have just done a phenomenal job. I think what you guys have built with Order Flow Labs and the amount of quality people, Leo, that I've been introduced through you and Job over the years, it's just fantastic. I can't say enough good things about you guys.
I appreciate that. That means a lot. I think it's just a testament to the work that we put into OFL. And we're able to, basically, nobody that you've seen on the show has been, doesn't have a solid understanding of how the market works and, some of the under dynamics that not control the market, but how to properly view the market in the context of not just order flow, but, price action as well. And to be able to just pick some people from our community and put them on stream, and they've done this well is actually mind blowing to me.
Yeah, and let's face it, you guys are always in the toughest environment. I think the closes are always more difficult. Some people might disagree with that. Some people may love the closes. I just think personally it's a little bit different because you've already been in the mode for the day. Then you get into the afternoon, and maybe we'll pull up your charts and show everybody in the morning what they'll be looking at today with you guys. But what's really interesting about what you guys do that I think it's special in the sense of it keeps you so focused on the now. I see some similarities with what Merit does in you guys. I think you guys have definitely some similarities in it. But the one thing that I take away from every afternoon session is you guys are so focused on the now, on what is the market telling me right here in this moment, and able to manage risk versus reward scenarios based upon feedback that the market gives you at the moment and the tools that you guys have put together. I think is what makes you guys, again, special in this sense. Coming into today, we've talked about, this is what's a little bit different about you coming in the morning versus the afternoon. In the morning, we kind of build up. I mean, we give a little bit of everything. We're going to do some macro talk. We're going to talk about some data because the morning is about that, like building what's happening for the day. Now we get to you. What are you seeing on the tape? Like, what does it that Leo goes through before the open?
That's actually a crazy question that you asked that, because what I wanted to do this morning is go through that process. So I actually have, let's make sure that I did this correctly. Pull this up here. So I've documented my preparation process and shared that, many years ago. So essentially what I do every morning is just kind of go through this process here. So I look at, kind of developing context for range and price action. So it kind of gives me an idea of what to expect for a given session. So I look at relative volume, the average daily range, what the overnight session did, what the average rotation size, and we could talk about that probably on stream a little bit. Just the price of VIX, just kind of what VIX is doing. And then just kind of give myself a context, from a narrative standpoint. Merit talks a lot about narrative and context, and I think it's incredibly important. So just where are we coming from? Where are we potentially going? What are the long-term support and resistance areas? And then just kind of mark out those levels, and then just be ready. So I've got 7-day ADR currently at 298, relative volume at 98. That's pretty good. And VIX is at 18. Obviously, there's nothing crazy going on with VIX other than it's just kind of dead and dying currently. And then we have the overnight range has 140 points. The average rotation in the market right now is 90 points. And just my quick note on this, I don't try to get scientific on some of this context stuff, but looking at the charts, it's just very simple. On the week, we've had a very large Sunday gap up. We've had 2 days of continuation to that upside direction. And then I just have a couple of key levels that we'll go through on stream. So this is a very quick way to just kind of isolate what am I expecting for the day as far as price action, and how does that inform the sizing that I would take on a position or what I should expect for a potential trade for that day.
I love that, Leo, because I think we don't get as much of a sense of that in the afternoon from you guys, and I'm glad to have you here in the morning to go over this. So putting this into context, if the trend is more bullish and you're favoring an upside breakout like we are right now, you tend to adjust your position sizing, favoring longs a little bit heavier, a little bit more, larger size, potentially adding more risk versus fading it. Is that something that comes into play?
Yeah, I mean, part of it is, if the relative volume is kind of guides how my position sizing goes. And so the higher the relative volume is, the smaller that my size is going to be and the larger my expectations are going to be for a given trade. And that's just kind of the way that I try to make sure that I'm positioned that my sizing is proper for the environment that I'm in, right? No reason for me to get oversized in a trade when the market's going, 700 points in a given session versus 100 points, right? And so if we have tighter ranges, then I will size up a little bit, and then wider ranges, then I'll size down a little bit and adjust my stops, etc.
I think it's the most important lesson anyone can have as a discretionary trader is understanding market environment and adjusting position sizes throughout the different market environments. Because when you go through different market environments like we have this year, you have to adjust position sizing because risk distances have changed. So that's like 101 for me. I mean, I remember in my beginning of my career, it was like, I'm going to trade the same size every day. I remember I was reading books and talking to other traders that were almost always talking about being consistent. And I felt by being consistent, it was by trading the same size every single day in every setup. But what I didn't realize was that my stops were varying based upon different volatility cycles and changes. And I thought I was being consistent, but I was actually being very inconsistent. And so I started just doing it based off of a distance of risk. And I know Merritt touched on this yesterday, but that's how all of my position sizing is. I know how much I'm going to risk, or I understand how volatile the environment is, and that's how I'm going to adjust my position size based upon that distance of risk. And that's really important, I think, for traders to understand, is like you're not just a 1 lot or a 2 lot trader. Sometimes that you can be a 5 lot or 6 lot or 7 lot trader and be risking the same as you normally would in a volatile cycle with a 1 or a 2 lot. And psychologically, that's difficult, I think, for some trader because they feel like it's a bigger position, but it technically really isn't. And of course, slippage and things can change with stops. I get that, but ultimately, that's so important, Leo. I'm so glad that you started off with that to understand how we get into you guys later in the day and how that morning sets that tone.
Yeah, I mean, the afternoon session is a different animal. It's not one that I'm particularly skilled in, but I think we've managed to navigate it on the the last couple of months.
Yeah, you've done great. And Leo, I'm going to leave you here. It's just you today. You don't have one of your boys with you, so we'll just be in here and chat, and we'll be chatting with you and watching you. And again, thank you so much for joining us. Everybody, make sure you go follow Leo. He is ES, is it _ Leo? Streamer? What is the Twitter handle now? Has it changed?
It's ES_F_ Leo. And the
even though he's trading NASDAQ.
Yeah, that's the irony.
Yep, go follow him and make sure you guys go check out what they're doing on Order Flow Labs. Also, NinjaTrader, put in the chat the email, because we do get a lot of emails about Order Flow Labs. Again, if you guys want some more information from them, you could email us and we can help direct you to some of the stuff that they have free on NinjaTrader. Leo, again, thank you for joining us here in the morning. I'll see you in chat, my brother.
Thank you, Deli. Appreciate it. What is going on, chat? I've never streamed a day in my life by myself, and so here we are. I wanted to, if you guys are cool with it, you really don't have a choice because I get to dictate what I show or don't show. I just kind of wanted to go back over this guy here. Pull it back up on my screen. This is what's that? I can't now. So this is the most important thing for me as far as preparation, going through and having a process. Whether you follow my process or somebody else's process, that doesn't matter. You create your own. But it's important to have an established process and how you go through and have a morning preparation. I don't love the idea of having like a significant bias. And so what I do is come through and go, relative volume that controls, what I expect for the session, the average daily range, what's the range, how have the ranges been, look at the overnight session, and then just give myself a summary, right? So some of those key levels that we talked about, or that we'll talk about, and then just mark it down. 7-day ADR is 300 points. Relative volume is 98. VIX is, down in the dumps. We'd much prefer a higher, VIX in the 20s. 25 is a great number. Overnight range 140, and then the average rotation 90. We'll get into what rotation means. And so my note here is just after that large Sunday gap, we've had those 2 days of continuations, and the two key areas that I've marked, just because it's kind of the only thing that's available right now, is the year open and the balance area low at 21,181. So we'll flip to the charts here and go back to this higher time frame. So this is the execution chart that I use for NinjaTrader. Currently, I've adjusted it a little higher. The last couple of streams I've done 500, 400 volume. This is going to be on 600 volume. So we'll let the market open up. And while we do that, we'll look at the 30-minute chart. And so here's what we have from the week open. So from Sunday's open, we have 2,000, basically we opened at 400, really a pretty big gap from Friday's range. And what we've seen is we tested the week mid right here on Monday and just continued a week. The weekly view up has held a few times on those tests. And something that I really wanted to look at right here is this level, this 21,000 level, and then this 21,181 level, as well as the year open. So that's these are the areas that I have marked from a higher time frame that I would be leveraging for the day. Now, if we go to a higher time frame chart, it's kind of strange for somebody who's an intraday trader to look at a weekly chart. But something that I think is really important for the context is we have what happened here in December all the way through February. So 3 months of sideways consolidation on the weekly time frame. We broke that significantly. And we went all the way down to, these 16,000 levels, which was, from a technical standpoint, a retest of these prior highs from November of, I think, 21. And so why am I showing you this? Because this is an important area where we had 3 months of balance sideways price action. We broke through it and, had a pretty large liquidation. What we would expect is when we come retest this balance that we'd have resistance, and we haven't seen that. And so I think it's really important to note that, this area being very important for, just from that higher time frame, there was no reaction. There's been no reaction there yet. Now, the higher time frame, obviously, the time can play out, on that higher time frame. And so just because we haven't seen a reaction, today or, the last few days up there doesn't mean that we're not going to see some type of higher time frame selling come in here. So for me, basically what that, going through all that means is that right now I'm cautiously, still looking for longs, but I will absolutely respect and, consider any type of significant selling that starts to break down, specific areas as important. So I want to carry that forward. So basically, if I could summarize it, I would say, kind of really looking for longs, for the most part. But I want to be aware that we are in a cautionary zone from a higher time frame. And so if we do get some crazy selling, I want to go with that direction. Hopefully that bit of a breakdown was helpful. So what we're seeing here is, last night was kind of interesting. There was a lot of large order book activity. We're even seeing it right now at the open. Somebody lifted here for about 400 lots, and then, various other buyers have come in here and lifted some more. And we saw a bunch of that last night. So there was some lift. I think there was like 500 lots lifted here, 500 here, and then another 500 in here. And we can see that from this delta profile, it's leg to leg. So basically it's going to anchor from this leg here and just follow what's happening, with the current bar as we build volume. And so we're able to kind of see there's another 1,000 there's some pretty insane buying. I'm not going to jump on this ship because, we wanted to go through that preparation, and it's really not my strategy to be a breakout trader, from an opening range standpoint. So we'll let this thing open up and see what we can get. But I think this is noteworthy. It's not a normal, the tape's not normal. We're not used to seeing, 500 lots and then Q being lifted, consecutively. And, for somebody to lift 500 or 1,000, that means somebody has to be on the offer there. So there's some pretty large business being done. So that's kind of the rundown. What do we think? Lift means buy the offer. So if when you look at an order book, if you have let's say price is trading 31.90 at 31.90.25 on the offer, there would be a limit order 31.95 or 31.90 and a quarter, and then on the bid you would see 390, 389, 389 3/4, and somebody would have to buy that market, lift that offer off of the order book. Buyers are definitely bidding this market up. Now, I would say that this type of move right here, right off of the open, usually is pretty strong. But there's also quite a few scenarios where we can pop this overnight high, as we've done, and then fail that, or even come back and test this this area right here, this OR mid. But the challenging part now is that this volume profile is going to be a little hard to read, because this guy came in here, somebody came in here and lifted 1,000 lots and kind of made our volume profile a little wonky for now. So we'll work through that. The chart is a 600 volume chart. And then this opening range is a 5-minute opening range. I just use a transparent fill from top to bottom, and I map out the OR mid. So the midpoint is a pretty important level for me. And basically, if we have this little breakout that we're seeing, it's a bullish environment. And, if we get a retest of this OR mid, that's a trade that I'll take pretty often. And so, yeah, we'll wait for this as kind of my A+. We're currently breaking out a little bit from the 5-minute OR range, the opening range on the 5-minute time frame. And this is encouraging to see. We're building some volume as we push, right? And so I know Stowe talked about that quite a bit. It happens on trend days, but it's also, it's telling us there's interest, right? As we build volume and do two-way, there's buyers and sellers interacting together. We're building that volume on the volume profile, and that's telling us there's interest to do business, to conduct, to do, the business that the market needs to do at those levels. When we see no volume, low volume, that indicates a lack of interest there. So let's just see what we get from the session today. From everything, it's just from the relative volume is actually decently high. I wouldn't expect it to be that high for, what we've done, just kind of grinded, the last couple of days. Every open has just been, it's kind of what they're doing right now is just blowing through, all these offers that are out there. And yes, I mean, it's kind of, there's not a lot of news to come out. Everything's, for more or less just out there. And so it's just it's kind of for the way I look at it, it's a little quiet, but the market, is marching upwards. Do you have any trade rules around the open? Yes. So what I do, I use a 5-minute opening range in NQ mainly because it helps slow me down. My main trade for the open is watching for some type of breakout and seeing if we get a retest of this OR mid. And if that happens, I want to go with that trade. If that fails and we break to the other side of it, then, right now, if that happened, that would be really telling because we've attempted to break out of the 5-minute opening range to the upside. If that failed, that would be an attempted, kind of an attempted breakout to the upside here at the overnight high. And then I would look for that to be give me a clue as to what the market may be, doing. If we have a failed breakout to one direction, we would expect the other side to come into play. Any consideration when it's significant OPEX weeks? Not necessarily. I don't really, follow OPEX or options that much. I do know that OPEX Fridays can be tougher to trade. So they're, a little more difficult environments to trade, but I don't really give that much weight from my 2-minute to 5-minute trades. Not really impacted that much by the OPEX week at all. I always joke about, taking my average trade size is between 2 and 5 minutes because that's partly true. I'm not usually in, large positions or positions for that long. And so my time frame is relatively low compared to, other traders. I think today will be a consolidation day. You might be right. You might be right. We've gone pretty far pretty quickly. It would be nice to, get a little bit of consolidation, kind of tell us, give us a little more of a clue on, what we're doing because we basically just mooned right to these old levels and, a pause to give everybody time to take a look here. So let's see what happens here with we're at that OR mid spot. So let's see what we get here. Getting a little bind coming into the spot. I see if we can't put a trade on here. I don't always just immediately take this trade, especially with the way this just kind of wicked this high. So I just kind of want to wait and see. It's a wait and see right now. We'll put a lot on here. See if we can't get a push to a new high. My target for this would just be to this other side of this opening range. So for me, this is a 40-point trade, and just looking for this area right here to trade, and then cover that trade here. So obviously encouraged by what we're seeing so far. Why am I targeting this? Because that's my first area as far as take profits go for this trade is the other side of the OR, so the OR high in this case. And we have a liquidity zone right here. So what happened here is there was some absorption from a delta perspective, and we pushed away from it. And so if we get that retest, that would indicate that not the retest, but we would look for the sellers that absorbed up here to defend those positions, and then if there were longs that were kind of trapped out there. I know the term trap traders is pretty popular, but I'm not a fan of it, so I'm not going to use the term. I refuse to. Do you always risk 15 points? It's my starter risk size, but I adjust according to the volatility and the trade itself. But every trade that I put in just automatically has 15 points, and then I'll adjust it. I don't really have a reason to adjust it right now. There's this little low volume area that's kind of building out on the profile. It lines up with this or mid trade. what I hate about my stop right now, just getting taken out, this prior day high was where my stop was, and that's actually a pretty poor location. But, you know, where this trade occurs right here, I don't really have a choice. I kind of have to take my, you know, just take the stop there and just see what we do at this prior day high, because it definitely could be a reentry, qualify for a reentry if we sweep below this prior day high and bid right back out of it. I would still be interested in that trade, but you know, the thing is that stop gives me time to, you know, consider if this is still a trade that I want to be in. Right now, it's not. There's tons of selling coming in, and the market's pretty excited. So let's see what we let's see if we get any change here. D, I was long for that or mid trade continuation. Never heard of 500 volume. Yeah. I mean, there's, you know, there's definitely different ways to look at price on a chart. You know, you can look at time-based periods, right? So you have like a 1 minute, 2 minute, you know, those are pretty popular with intraday trading. You could look at ticks. So basically, you know, create a new bar every time you have a new, you know, a trade. So you could have like a 500 tick. So that'd be every single, you know, 500 trades that go through, you know, print a candle, or you could have volume. There's tons of other, you know, periodicities, but you could use I use a volume chart because what this tool that we have called Delta Map, it looks at a calculation of volume, the ask volume minus the bid volume. So it separates out, you know, it's not just, hey, you know, 500 volume was transacted, but it's looking at the difference between the volume that occurred on or at the offer or at the bid. And so because we're looking at that differentiation between the offer, you know, the delta of, you know, the ask volume minus the bid volume, then the way that this works best for us, from an underlying perspective, is keeping a constant, and that constant is volume. So every bar is the same amount of volume that's coming through that bar, whereas a 500 tick could have, you know, 500 trades could occur, but you know, they could they could trade 900 volume or 700 volume in that bar. You know, just depends. Like one trade of, you know, 10 lots would be 10 volume, but that's one tick. And so, you know, for us, there's a reason for the volume periodicity with the tool that we use. And that's kind of keeping that constant for us is important. Appreciate that. Okay, so we attempted, this is the way I look at this right now. We have a 5-minute opening range. We attempted to break out to the upside. That's failed right now. We tried this long here. It didn't work. No problem. And so what I would be looking for is now some type of continuation trade, because I want to trade this as a failed opening breakout. And so for me, I need to, you know, for my process, I'm looking for some type of pullback up into, there's a low volume area here. It's kind of where some of this selling initiated, or even looking at taking this trade, you know, this OR mid trade from the other side, because this for me is a pretty good, you know, equilibrium, I guess, as well as the pivot. This is something that we developed, and it's based on volume from the prior session. And so basically, this is an important area for me, as well as this OR mid, and then this standard, you know, MGI. So yesterday's high correlates with that OR mid too. So up here in this range, these 350s, if we get a test up there, I'd look for a continuation trade there. And then, right now I'm just looking for, hey, this market, we tried to break out, couldn't really continue that. We've been pretty bullish for a while. Maybe there's a little bit of a correction to be made. Chat's already getting paid. It's great. So you was short the OR mid. If we get up here and get a little bit of a pause in activity, yep, for sure. The single prints from yesterday do, here, let me go back to too many charts. Okay, so the single prints from yesterday, this is a 60-minute chart, but there's some singles down here. I think that actually does, look pretty juicy. You have a bunch of lows here, kind of equal lows, that we could definitely see a sweep of that area for sure. That would be interesting to take a look at. All right, let's see what we can't drum up here. I know Stowe would just be in here just shorting this thing like a Chad, but I'm just not a great momentum trader. So for me, I could recognize the fact that, the markets, had this bit of a failed breakout, and, the best trade is to get short with all this selling. But I just need a little bit of a pullback to get into that trade versus, selling into the lows. The Delta profile is leg to leg. Yeah. So right now we're looking at the top of this range here from this high is where the Delta profile is currently drawing from. Somebody has to short the hole, probably Stowe. I think one thing I love about Stowe's trading, just being able to watch it over time, is that, he is consistent in his approach. And, I didn't actually realize how much of a momentum trader that he was until I started watching his streams, even though I talk to him basically every day. So we can look at the market basically in very, very similar manners and trade very differently. All right, we're going to try a short here at right at this OR low. There was some selling here right against this little. There's an LVN on this profile right here, and so just seeing that little wicking into that LVN, just looking for this continuation trade. Where's lifted here, at 25s. So there's kind of two things to get into, two reasons to get into this trade. So this is what I want to see. I want to see selling, which is we're seeing. We can see it in the Delta profile and then the tape as well. The Delta map starting to flip from neutral to very aggressive selling. So this is great. I'll probably cover this trade if we take out these lows and test yesterday's close. That would be my target here. So I use MGI, standard MGI for, what's context, but also for targets. Because I know that a lot of times we're going to get into this prior day close and bounce pretty hard. And so if I have a really great trade on, that's profitable, 40-point trade for me is great. And so I will take that, cover that trade every time. And if we come back up here, I'll likely cover for, scratch, not scratch, but, I definitely don't want to give up any unnecessary, unrealized gains if I can, but I also want to allow the market to move. And since I am trading just a one lot, I kind of have to take what I can get to a certain to a certain context. Normally, if I had like 2 or 3, I would have taken 1 or 2 here because we had that absorption right here into these lows. But it's it's a little bit trickier just trading one lot. But we're seeing lots of selling still, as we rotate around. So I'm just gonna hang in here. If you guys aren't on for the afternoon sessions, you should join those because, Stowe says the morning session is for the big kids. I don't think so. It's the serious session, the morning session. But that's true. That's where we, we're pretty focused. Afternoons, there's lots of fun stuff that goes on in the afternoons. Deli asked me to come in, or somebody asked me to come in, fill in for Kane. And, my alternative strategy here was to get you guys to come and watch us in the afternoon instead of the morning. Good morning, Leo. Good morning, Shab. Tons of selling in here. I want to see this progress forward because normally when this happens, that's pretty indicative of bids just layering in and just taking in fills. And so we're seeing that counter move right now. So tons of selling on the tape, getting nowhere. Typically, we're going to see a bit of a bounce when that happens. Doesn't mean it's going to moon, but usually there's a bit of a response to the other direction. How do you recognize absorption now? Right here. So we have a bunch of sideways price action, tons of negative delta in this little range. And so we're seeing some absorption here. And what we want to see is we want to see this break. That's going to give a pretty nice liquidation if this little range breaks, especially with all this selling that's coming in here. Do you have a target in mind? Yes. So prior day close, I think, if we push through that, we could break the overnight low. But yeah, I think prior day close, I'd be looking to take the position off at that point. How the delta profile provides information about the context of the market, because it's telling you who the aggressive participants are. And then also, if you know who the aggressive participants are, you know who the passive participants are. Seems doable. Yeah, for sure. 270, I think, is not out of the question. I'm just watching this response here. I'm actually looking for an ad, to be honest. I just want to give this a minute to, we had that absorption. We talked about it pretty much real time. We're seeing that response. I just want to see if there's an opportunity to add to this position or if I should just hang out. Pretty strong buying here. They're going to take me out of this one. So it's 0 for 2 for Leo. But let's see what happens here. I still don't hate the continuation idea, but we had all that selling that just kind of got offsides, I think. Let's get back in this guy. So we'll get in here at 320. Really wanted to put more on that, but it didn't give me a chance. I think this is kind of a tricky scenario because you have that failed breakout to the upside. We're having a hard time breaking lower. So, the correct trade is to, if you're looking, like we're going to take this trade, is to get some of these reoffer areas, like these high pullbacks, for, continuations until, kind of we're proven that the market is really having a hard time going lower. Oh, Trump is live? Great. That'll be fun. We'll put another one here. So we're at 317. Let's just ride this bad boy out. Just kind of have to sit in some of this consolidation here. Can we get him on the golf course? Yeah. I think the great thing about, we've had a really impressive amount of volatility and range. And some of you who are newer you're learning, lessons about range and volatility. Sometimes that take years and you're getting consolidation, expansion repeatedly over and over. And, in a month or 2 months that, normally would take a year, 6 months to play out. So if you're new to trading, it's a great time to, be taking notes and learning in this environment, even though it's tough. What are the parameters for your bars to determine blue? Okay, so blue would be aggressive buying above a certain level of standard deviations over time, and the red obviously being the same, and then neutral would just be a neutral based range, right? So if the buying or selling is more or less neutral, then we're printing gray bars. So I'm looking at this, this volume profile here. We're starting to build, some volume down here. That's encouraging for this short position because what kind of indication is, we're building volume and gaining acceptance into the lower part of today's range. And so because of that, I still pretty much want to stay on the short side for now. Even though the higher time frame bullish, we're in that cautionary zone. So I mentioned, when we started, if we got some aggressive selling, I would want to be part of that. I would want to go with that move because of where we are, what's happened. It's not, oh, price has gone too far, too fast or anything like that. It's just that I'm responding to what we're seeing on the order flow today. Yeah, that point of control anomaly from that 1,000 lot guy is kind of annoying. What's annoying me right now is that we're just sitting here stuck in this little consolidation area. I would prefer this, definitely prefer this to move in my direction. I want it to move lower. I mean, I'd like to see this. This is, what we saw down here, that absorption we saw at the lows, we're getting some of that here in this range. So me being on the short side here, that's a good sign. That means there's an offer, right? That's just sitting there and buyers are lifting it, but they're not getting anywhere. So that's a great sign. I want to see that. And then now we're pushing away from it, which is even more encouraging. So let's see if we can't get a little bit of a push here. I'll probably will cover one at this pivot because that's an important reference point for us. And then look for that continuation to Friday close and lower for the other one. Oh, Trump hasn't started yet. Maybe he just did because I just got taken out of that one with force. All right, we're going to try this. I think I'm not going to try to short this thing if it's just going to rally back in my face. But, we just tested that yesterday's high and got a bit of a reaction there. So I'm just going to, trade this idea, let it play out a little bit. I understand Trump's talking. There's, some additional volatility that's going to come, but we'll see. When is the deals? They're talking about deals between countries. Okay. Well, maybe it's a good time to be sitting on hands. We'll see. Do you know when he's going to start? Is the jet bullish or bearish? He's speaking now. Okay. Hmm. Yeah, I think I'm just going to cover this and then wait for whatever needs to happen, and then see if we can't get a better read. The lows down here were definitely tricky. You're seeing all of that selling. You have kind of really logical reasons for that to break, and it doesn't break. Kind of the same here. And, it doesn't work. But that's trading. Not every trade works. Oh, he's done already. Okay, great. He just wanted to get on the camera and say, shorts back on. Yeah, you're not wrong. All right, let's try this. We'll give this a shot. Right where that OR mid trade, I said, hey, if we break down, we get this OR mid, try that short. Trump's done talking. Maybe we'll get a rotation lower finally. It's a pretty aggressive selling, actually. This is more aggressive than we've seen all morning. It reshorted as soon as he walked off. Yeah. Yeah, Kane, get in the chat. Give us some likes. I'm not a for all the jokes that they make about me being a streamer boy, I don't know anything about streaming. So if you like, give us some likes, give the NinjaTrader crew some likes. They deserve it. They do tons of work in the behind the scenes to be able to bring on people that are educated and know very, very good traders. So I appreciate that. There's two Canes. Kane is my brother Kane. Can we just push that narrative? Isn't he on holiday? Kane, aren't you supposed to be on holiday? Why are you in the chat? Came to check in. That's pretty sick, man. Appreciate that. We've never seen Americane and Kane in the same room. I just can't disagree. Americane for the win. It's still hot in Dubai. VIX is on the move. Great. Yeah, I mean, this is the most aggressive selling we've seen all morning outside of this. And so, yeah, I went for the continuation shorts, got stopped out. Tough luck. We had some outside forces not working for us there for the moment. Right back into this area where it's just like, buyers, when the bid steps in, it's just kind of like they don't care. And Nick, it's 100 in North Texas today. That's basically Dubai. So we have a bit of a low volume area, but right now it's the bid is stepping in full force when they want. So I'm just going to get out of this and just wait for some other context to develop. I'm not going to fight the buyers that have been here. Let's look at the higher time frame. Yeah, I mean, we're just continuing to come into this the year opening price is 2168. I think technically it's 269, but I may be off by a tick. But yeah, we can see we pressed down into it here, didn't get there. Tried again, no dice. That's really we look at the last time we've been here is from this balance range all the way back to December. And if we look at it, we zoom out a little bit. We got exhaustion right into That or mid. Sorry. Damn, I'm gonna miss this trade. All right, we'll take a look. But yeah, so we have this large distribution from that December timeframe, that started in December and liquidated from, in February, started to move. So we don't really have anything recent from that higher time frame look. So we just kind of have to depend on, the market's on stilts right now. I think, that there's a lot of sentiment about, we've gone too far too fast. But yeah, there's not a lot of great reference points from a higher time frame. Everybody should say happy birthday to Stowe. Stowe turned 40 today. Happy birthday, buddy. I see you in the chat. And everybody should say happy birthday. There we go. Give likes for Stowe at least. If you're not going to give them me likes, give them for Stowe. Oh, you were allowed to sleep in this morning. No wonder. Do you like how I use the term allowed? I know what's up. This would have been a fantastic re-entry for me on that short, but we were busy looking at the other time frame. Look at everybody celebrating Stowe's birthday. That's fantastic. Please sing a song. I'm not a singer. Stowe's the singer. He has the voice of an angel. Stowe, are you baking your own cake today? That's an important question. Stowe has to sing. Yeah, the bid is bidding right now. For me, this trade that I took here, this short, I would have covered some of it. And just having that one lot's a little tough. I think that I'm a little salty about that trade not working. It's you guys ever have trades where it's just like you could take 50 trades, and none of them really matter, but there's one that's you're just kind of like salty about, or is it just me? Sometimes there's just trades that just irk me. Every day, Leo. That's great. That's great. I really do, just looking at what's happening from an order flow perspective, the bid is holding these levels, these lower areas, but they're not really progressing forward. And with the context of where we're at, we had this 5-minute, this little peak above the 5-minute OR, failed it. Sellers, I guess you could say, failed it here. So we're just kind of getting stuck. I'm just leaning a little more bearish because of that context. All right, let's jump in this short here. every time we've come into this area, we bid it out. We bid out of it. And so I'm looking to cover one at least for, a quick 10 points, 15 points. Offer starting to pull. VWAP is at 21,316. I don't have it on this specific chart, but the 24-hour is the one that I track. Just from an intraday perspective, starts at the Globex open from last night. All right, so I'm going to take one there. Just try to secure a little bit of profit on this trade, and then just let this guy run. I don't really have a reason to stay in this if we get back above this range again. I think we really need to leave this range. So if we continue to chop up into here, I'm not really going to be that excited to stay in the short. So I'll just keep my stop here at 8 points above the entry, just to give it enough room, if it's going to come back up in here and trade around this high volume node, just from one side to the other. That doesn't really invalidate the trade, but if we start trading up here, then I don't want to be in the trade anymore. Let's see if we can't get a bit of a push from the sell side. That'd be pretty encouraging to see. Target half today's range is a net point gain. That's a great, I think the most important thing is if you're going, for your profit targets, have a consistent approach. I've taken profit here at the OR low because that's an area for me, to target for a trade. And also we have that 24-hour VWAP where the bid was kind of step in, and every time we could see it right here, here. So I want to take profit where the opposing party has been stepping in because we're getting reactions from this area. So if I've seen, buyers, kind of hold these levels and I'm short, that's where I want to cover that short trade because that's where they're bidding it from. So I want to kind of take profit where they're starting to push the market in the other direction. What made me dismiss the longs altogether? Really, it's, hang on just a second. I may just flatten this. Yeah, I'm going to flatten out. It's really just this context, right? So we had an open auction, or not an open drive, test drive, I would call it. We tested the overnight high. We, kind of breached it a little bit, consolidated, and then we liquidated to the other side of the opening range. So that's a bit of a bearish move out of an open where, if you look at the context, it's, hey, we are, pushing higher. We've got this big Sunday gap to deal with, et cetera. So the market should not have a hard time going higher, right? We should have seen this at least hold for continuation to the upside. And because that didn't happen, then I, with that context in mind, get back in. With that context in mind, I wanted to lean on the other side of that trade where, shorts, sellers may have an opportunity here to give us a little bit of a pullback. A new low of day would be encouraging, right, Stowe? Are you short? You're in the same trade? Oh, you're on the couch. Yeah, because you said you weren't allowed to short anymore. You were no longer shorting the market. The last time you said that was the prior high in the market. Stowe legitimately called the top to the day. Well. We're just going to chop around in the middle of this 5-minute range. I do really prefer this entry to be up into this low volume node where priority high and the mid are. So let's see if we can just get a better entry on this trade. All right, so we're back in at 41. If this doesn't work, we will be done trying to sell this thing in the middle of this chop fest. Not in the middle, but I couldn't believe when Stowe said that on NinjaTrader Live. I'm not going to repeat it, but you can read the chat. It wants to fly, let it go. Fair enough. I will let it go at 53. All right, cool. The production crew just informed me that we've got the crude oil inventories report coming out in just a moment. Which also correlates with the initial balance, the close of the initial balance period. So maybe we'll get some volatility that kicks in after the initial balance is done. Wulong, I love your style too, brother. Appreciate that. I think this is questionable for sure. Questionable for sure.
Hey, Leo.
Hey, Shy, how's it going?
Good. How are you? Creeping in on your stream quickly. Crude inventories are up here in just a second. And we shall see. So we have crude inventories expected was minus 2.0 million. We came in at plus 3.45 million, which is lower than API was yesterday, but still well above the forecast. Cushing came in at minus 1.069 million. Cushing's getting low. That's the actual WTI contract that you all are trading, except for crude tends to trade off the headline inventory number for some reason. Distillate stocks came in at minus 3.155 million. That is bullish for the distillate market. And gasoline inventories at minus 1.022 million. That is bullish for the gasoline market. And we have not much movement in crude. We're seeing a few cents. Usually it takes a little bit of time for this market to really react to the number, but we didn't tank on it, so that's a positive sign for the market so far.
Appreciate that. Yeah, it doesn't look like we popped to 20 cents, but typically we have a big of a reaction, right?
Yeah, absolutely. I think it's kind of stuck because, again, we did have a big build, but the market was anticipating a much larger build from the API numbers that came in last night. That's kind of why we saw a sell-off earlier this morning. But because those numbers come out at 4 p.m. on Tuesdays, but little to no reaction right now. That's a positive sign overall for the crude oil market.
Gotcha.
And with that, I will leave you back to the indices.
All right. Thank you. All right. It looks like we're about to get stopped out of this trade, that's a great thing. Love that for me, but we have logical reasons to be in these, and the chat's telling me, hey, Leo, this is bullish. It's going higher. Why are you short? Let it go. You're gonna get your wish. It looks like I'm out of the trade. The market can rally now. I give it permission. The flow is wild. The flow, the order flow last night was pretty wild. We're seeing 500 lots being lifted in like 3 different areas. That's not normal. Why is Kane talking this funny accent? We're going to push right after I get stopped out, huh? Right from that mid. There's like 1,000 reasons that I want to stay in this trade short, and one that I don't. It's the OPEX. It's always the OPEX. It's the gamma. It's the OPEX. It's the whatever. All right, we're going to try this one more shot. There we go. Let's go. I gave you guys a chance, you bulls. I gave you a chance to push this market, and you didn't do it. So we've got to sell this thing now. You had your shot. It's the JPM caller. It's the Cagnina wine mixer. How about that reentry? I love it when the trade that you were just dying to get into you re-enter it, and then it just immediately goes in your direction. I'm not celebrating early either, because this thing could definitely come right back into my face. But it's just a great feeling when you enter the button and the market just goes immediately. No MAE. Oh, that's hilarious, Don. All right, I'm ready. Sell it. Jim, yes, I did say the tape is not normal. That's a long-standing X joke. But I mean, it was pretty wild last night. Seeing orders getting, 500 lot orders taken in NQ overnight is not normal. That's not a normal thing. Is the Gamma in this room with us right now? Yeah, Nick's in the chat. That means Gamma is in the room. Stowe had, that's pretty funny. Stowe's 40th birthday is today, but his name ends in 42. That's false advertisement. I agree. Two, there's a lot of good reasons to stay in this trade at this point. Now that, the session's kind of developing, volume profile wise, there's an LVN right here that we're seeing, that we're wicking into the prior day high or mid, and we're seeing lots of buying, just kind of getting hung here. But, the bid is bidding. It's doing bid things. It's just a battle. We've picked a side to be on, and we're just going to let it play out. This 10 a.m. hour has taken a few months of my life. It probably has mine as well. If you drew this volume profile right here, it would be a perfect Gaussian distribution. So it's pretty difficult to, just on this leg from where we at, from right here to here, we're basically just building, we're putting in like a perfect distribution. I mean, you could see it in the price action as well. Why? Okay, so why do you have this? Why are you picking? Okay, so you said it's a battle. You picked a side. Well, there's a reason for me to be short. We attempted to break out to the upside. We failed that. I have this OR mid trade that's basically my bread and butter for the morning sessions. And we're, 1, 2, 3 attempts to break out from that OR mid, and we haven't. And so I'm just leaning against that as my out at this point to, be focused more on the sell side. Yeah, there's absorption. We saw it. We talked about it. But for me, just from a playbook standpoint, I'm looking for this trade for continuation lower because we broke down from the OR after failing to break out. If we go higher, that's fine. I don't, it doesn't matter to me. But this is kind of a playbook trade for me, so I'm just going to stick with it. That's my strategy. Overnight has been getting the best action so far. It's kind of wild. Leo, do you watch the VXES somewhere in the background? A bit of intermarket confluence. If not, why? Yes, so I have an ES DOM, just that with a volume profile and some basic MGI that I have on one of my right screens. I don't have it up right now, so I'm probably missing some of that context. But it's always important to know what the other market is doing. For me, that's the other market. Compared to NQ would be ES. I may have to just flatten this trade because we're just doing more of the same of what we've been doing. Yeah, so it's important to know what ES is doing when you're trading NQ, and I think it's the same when you're trading ES to know what NQ is doing, because there are tons of examples where they may not be trading in tandem or together, but one is testing an important level for that market. So like, I think the other day we were on, and ES was like testing, back testing the initial balance high, and NQ was kind of in the middle of nowhere, and we saw a bid, come into the market more logically likely because the ES was back testing its initial balance. So it's important to know those things where one market's testing an area, the other market may be in the middle of nowhere. And so it's important, I think, to have that awareness of what, the other market's doing that's highly correlated. Because, these areas are going to, have a response. I mean, that's why we track, basic MGI. Because it's kind of like if everybody else is using those areas for continuation, for market structure, et cetera, then you're going to see responses at them. And so it's important for me to be aware of what that other market's doing. For me, for VIX, I do use the pivots. So we have this pivot, that's available. It's a custom study for us. And so for me, I use the VIX pivot just to kind of give me an awareness of where the pressure, from a buyer sell side would be. If we're above pivot, the VIX, that's going to be, pressure to the upside. If we're below it, that's pressure to the downside. It's important for me to know where we are in comparison to that. And we are just not getting continuation lower from this little range we're in. Long live the Dow. I can't stand trading the Dow. Stowe loves it. It's his market. Yeah, just getting wicks on both sides. So what does that tell you? I think there's a really important thing to kind of remember right now in the moment is that, if you've listened to any of the afternoon streams that we've been talking about, balance, imbalance, we're in balance right now. So we are in a perfect Gaussian distribution. If I had a volume profile, you can kind of see it right here in the session profile. But if you're able to even look at it from a leg to leg standpoint, we're perfectly balanced. So when we break from that balance, that's not a move you want to fight. Those are going to be we've done nothing but consolidate. When we push away either direction, that's not something that you want to fight. Typically when those breaks occur, they're violent and they're fast. And so you don't want to buy into a liquidation break, and you want to sell into some type of rally from that breaks out of this balance range. So that's a great thing for me from an awareness standpoint, is being aware of when we're in balance and being aware of when that balance breaks. Because, we can trade the edges of price as much as we want to, but if we're not aware of that context that we're kind of in a very tight balance right now, and we try to break and we try to buy a liquidation away from this balance area, this little balance range, then you're just asking for, trouble. you're asking to get run over, because the context is we have been in severe consolidation. We're breaking away from that consolidation. So the market's decided to move, and you don't want to be running against that move. Yeah, it's great, HK. That's a fantastic way to view the market. Sunday's gap fill. That's quite a ways away, Dan. Yeah, VPOC did move, on all this volume being built down here. I mean, I want to see this from, to be short. Like, this is really what I want to see with the context of what's happened this morning. So this is kind of giving me, that picture that, I can hold on to this trade a little longer, because normally just being in a one lot, I'd want to cover right around this area. We bounced from it 100 times. We took profit here earlier today. It's proven to be an area of support, on that intraday time frame. But all of the context of the volume building down here, volume point of control down here, we're rejecting prior day's high and the OR mid. It just gives me a little bit of, not hope, but the idea that maybe we're going to continue lower at some point. So I'm not really ready to hit the eject button, even though the buyers are once again showing how strong they are. We see you. We see you. Somebody asked about time stops, or I think maybe Nick brought it up. I don't really use time stop. I think what the biggest tell for me is just a frustration stop. If you're in a trade and it's just like not going, you push into like that area you're hoping kind of breaks and it doesn't. My frustration level definitely builds, moments like these. And so oftentimes, like if we don't get a push away, pretty soon I'll just cut the trade. It's just like I'm not even interested in the position anymore. And so I'd rather just be out of it and give myself an opportunity to kind of get in a more clear headspace. Frustration build similar to volume build. Exactly. My frustration is building. My bad trades are often the ones I hold too long. Yeah, I think I agree. I would agree with that. And so like if you use that frustration, that's like kind of a clue, for your mindset. Hey, if the trade ends up working out, that's great. I'm still going to mismanage it more than likely if I'm very super frustrated about the trade in itself. Approaching frustration point of control. Yeah. I mean, yeah, we have a big volume node here. We're not doing anything. The spring is winding. It is. I'm going to take that, cover that for small gains, and then let this thing decide what it wants to do. And then we'll see if we can't get some type of something. Kind of right here at the top edge of value, developing value on the day. yeah, if we don't break out of the range, then no reason to hang out and fight a market that doesn't want to go anywhere, you know. Do you reset mentally from big wins and small losses? Is there some inner dialogue? I think that what I do is just reset when I've had a series of consecutive trades, win or loss, just to check in. You know, are you still viewing the market properly? Kind of a mental check in. You always want to make sure that you're at least operating, you know, in your B game at a bare minimum. It would have been cooler if the market would have cooperated and given us better price action this morning, but you know, we have to take what we have. We have to trade what we have, the opportunities that we get, and then recognize when, you know, it's not the best for your strategy or, you know, whatever that might be. So for me, it's, you know, again, just kind of going back to that context, you know, we're starting to move away from some of this volume. So if we, you know, there's kind of two scenarios that I would be looking for. One would be if we break out to the upside, you know, look for some type of continuation trade to get you back to that upside break. If we still continue to fail this, I would actually not take a trade in this range again. I would want to see the market break down away from the current volume that we have, and then give us, you know, a little pullback to trade into that expansion, because we were looking at expansion at that point. So that would be kind of, you know, scenario one: wait for a breakout to the upside, get, you know, long with a continuation. Scenario two would be wait for a breakout to the downside and then take the, you know, reoffer for continuation that way. It's ugly, it's directionless, it has no personality, nothing, you know, nothing's happening. And so, you know, we don't want to waste mental cycles trying to force a trade when it's not incredibly clear on the direction that we're going to go. So then you can go back to your higher time frame, you know, look at, you know, okay, what's happened, right? So we have this yearly open. It's pretty important. We've broken through it. We've held it like 3 or 4 times. Attempted to go test it, no dice, and we're going back up into these highs. That's kind of what you know, what we're seeing on the higher time frame. And so that keeping that into context is always important. So I always have, you know, this chart here for me is something that I have side by side with my execution chart so that I don't get lost. You know, I can see the forest through the trees. Den Q is 6% from Friday's close. That's right. Buyers be buying. Yeah, this is a NASDAQ chart. Yep. Indeed. We're trading the NQ. ES is too slow and boring. I can't imagine how bad it is to trade ES today after seeing what we've done in NQ. I feel bad for you ES traders. That's at 500 volume chart. Dara RTH is our bread and butter. Globex, we do have quite a few Globex traders, but most of the most activity that you'll see in our crew is around the RTH regular trading hours.
Leo.
What's going on, Jim?
Not much, man. Hey, Leo, have you ever met Jason Shapiro, Crowded Market Report?
Not personally, Jason. Nice to meet you. I've watched a couple of your streams and kind of familiar with some of your work. So nice to meet you.
Yep, we got that mute button, Jason.
The mute button.
Yeah. Smash that like button for Leo, everybody.
Nice to meet you too, man. Where are you located, Leo?
I'm in the Midwest.
All right. Won't hold that against you too much.
Fair enough.
So we're going to be talking about some commercial positions, some large spec positions, and stuff like that in a couple of minutes.
Yeah, I love this conversation. I'm excited to listen to it again and hear you guys chat.
All right. How do you feel, Leo, about your maiden voyage for the morning live trading stream?
I mean, I got kind of stuck with nothing as far as price action goes. So it's, it's a little tough to get around that, but we managed to talk through a couple of trades and talk about why not to be in a position right now. Unless you bought that low.
Yeah. No, but I like your discussion about the volume profile, the Gaussian distribution, and just the pivot up and down.
Yep.
Yeah, it's good stuff. Oh, by the way, Deli's hammering me again. Make sure you ask Jason about treasury bonds. Don't worry. I got the memo this morning, Anthony.
We're going all in on the treasury talk.
Yeah, I already have it queued up on my chart, so we'll be ready to go. And Jason, no glasses today. Did you have glasses last week, Jason?
Yeah, I need them. I can't freaking see. I actually have an eye doctor's appointment today, right after this.
Sometimes I do my best work when I can't see.
I'm blind. I'm blind in my right eye. I'm totally blind.
Yeah. You're looking good. So Leo, you're doing double time, right? You're going to be back.
No, I'll be on tomorrow. It's XYZ and Nick today.
What? I got added in my show now. Oh, okay. I have you on my show list. Sav, what's up here?
I mean, I can do a double shift if I need to. So one of us will be on. I'll tell you that.
Yeah, Stowe is the man. So on that. In any event, though, good job. It was a great job. I was listening. Thanks for being here with us. And when am I going to see you again? Thursday or no?
Yeah, tomorrow.
Yeah, awesome. All right, man. Thanks again, and we will talk to you soon.
Okay.
All right. Jason, how you been, man? You got eye doctor's appointment?
Yeah. I always have eye doctor's appointments, man.
Uh-oh. Yeah, no, I just have two pair of glasses. I have the glasses that I'm wearing now to make me look sophisticated. I know it's not working, but that's the objective. And then the ones that adjust to the sun. Go outside and they turn dark.
Oh yeah. Well, I've got about 10 pairs of glasses because I consistently lose these, and without them I can't see. They're all readers. I just can't see anything without them. So
Well, Deli is just reminding me. He wants to start with bonds. I have a weekly bond chart. This is the 30-year Treasury bonds, a weekly bond chart right now. We're breaking bad. We have, we're getting close to that. I think we wicked to 4.95% yield maybe today on the in the cash market. Anything to note here in the commitment of traders?
There's not a lot of note there. Actually, the relative positioning between the shorter end, the 5 years, and the 30 years, we could argue is worth looking at and indicates that there's going to be a continued steepening in the yield curve. I think the main thing I would say with bonds here that I'm just hearing every single day from every single outlet that I listen to is at some point, these higher rates are going to matter to stock investors. I think it's a ridiculous comment personally, mostly because, again, everyone in the world is saying it. Therefore, I don't know what the value is. At some point, stock market's going to care about higher rates. Okay, good luck with that. Everybody in the market knows where rates are. Everybody in the market knows what bonds are doing. Okay, and the market keeps going up. So, to me, that kind of analysis is somewhat silly. I am aware that many of the fixed income markets are back down to where they were on the lows earlier this year, when there was some sort of panic and there was arguably some sort of Trump put that was put into place when bonds hit these levels. But to me, there's quite a difference between when bonds were down here back in, sorry, I just want to look at my chart, but back in early April. And now, back in early April, it was due to the fact that liquidity was drying up. We saw it across the bond markets, not just treasuries, but off the run treasuries had no liquidity. Things like munis had no liquidity. Junk bond spreads started to move out a lot. Liquidity was drying up. That was a problem that needed to be addressed. And they did address it in a way, in that the Fed came out and said, we will provide whatever liquidity was necessary. And that was the put, and that was essentially the low of the market. But now that's not the case. There's no liquidity issue here. We're just getting some news flow that, things are improving on the trade front, and therefore that should be economic growth friendly. So in economic growth friendly, yeah, you get higher rates and you get a steeper yield curve. But to compare this to what was going on a month and a half ago, to me is just silly, personally. There's
Yeah,
no
I mean,
magic level in bonds where, the stock market is going to finally realize it. That's just not how markets work. It makes for great, it makes for great conversation. It makes for great macro conversation. I always say macro guys always sound smart. They just rarely make money.
Yeah.
So this is like sort of a typical macro narrative to me right now.
Yeah, I mean, it wasn't too long ago that, I don't know, 12, 18 months ago, that we were the curve was inverted all over the place. Now we're talking about the steepening curve, and then the equity market's is still doing what the equity market's doing, right? So that inversion to normalization to steepening is kind of marching to their own drummer.
Yeah, when things were inverting, everyone was bearish because of that, right? It meant that the economy was going to slow, right?
Yeah.
And now that it's steepening, everyone's bearish because of that, because it means that rates are too high. I think the whole obsession that people have with rates and what the Fed's going to do, and are they going to lower rates and all that stuff is, quite frankly, silly macro narrative is what I would call it. I don't know why. If the Fed were to lower rates here, I would sell bonds all day long. There's no reason to lower rates. People are like, well, we need to lower rates so we can get mortgage rates down, so housing becomes more affordable for more people. But lowering the Fed funds rate does not get mortgage rates down. Mortgage rates are based off of the 10-year, as we know, right?
Yeah.
And I would argue that if you lowered rates here, the 10-year rates would go higher. And I think that the Fed knows that as well. So because
Yeah.
markets are done on expectations, so if they're going to lower rates, you're going to get even higher. You have an economy that's not really having a big problem here. Certainly, there's no sign that employment is slowing. And to lower rates here, the market's just going to have to anticipate even more, you know, growth and probably
Yeah.
inflation expectations. They would have to raise those. So if they're going to raise their growth and inflation expectations, then 10-year rates are going to go higher, not lower.
Yeah.
So the whole idea of, lowering rates to me here is it's just silly.
So in this particular market, we're seeing the large specs are still relatively net negative and pretty consistent over the last 4 reports. And then the commercials are almost neutral now. It's a little bit short, a little bit negative, but almost neutral, as they have been for a while. So it doesn't seem like there's any like really movement with respect to the large players in this market over the last 4 weeks.
No, there's no big positioning edge going on in fixed income right now. And there's kind of an issue with a lot of these fixed income COTs, right, and have been for a while now, because there's such a large portion of the open interest is based on the basis trade that these hedge funds have been doing in size now, right? So that has, I believe, skewed the COT positioning report.
Oh, that's interesting. Okay, I haven't thought about that. Tell us a little bit more about how does the basis trade work right now with this market?
So they just play this game of, they can buy some off the run cash bond that's trading cheap relative to the futures price. And then so they buy the bond and they sell the futures and they make 2 pennies.
Yeah.
And then they leverage it up 2,000 times and they make, 4,000 pennies. And it's a very low risk, um, low payout trade, which these people love to do because they can lever that low payout up.
Yeah.
And traditionally, what happens is eventually it all goes bad and they blow up. But that I think has less of a chance of happening now because it's happened a few times before, and so now people are on it, and the Fed is on it, and they're watching for that liquidity problem. And so the more highly watched it is, the less chance it has, I think, of happening. But that is it's happening, and
Yeah.
therefore, if that's what they're doing, buying the cash bond and selling the futures in size, that then shows up on this report as a large speculator position. So you can see as you go across the whole fixed income, the 5 years, it's mostly in the shorter 5s, 10s kind of thing. There's just massive, large spec short positioning in those, and I think that's because there's some large part of that is based on this basis trade.
Yeah, that makes sense for sure. Well, let's pivot to what other markets are on your radar screen here? Is there a particular market you want me to pull up here?
I mean, the 2 trades I have on are I'm long the S&P and I'm short the yen, which is based on this positioning stuff. And then, essentially the way that I look at things and the way that I try to put on trades is based on 3 things: positioning, which is I use primarily the COT to determine; sentiment, which I use reading, listening, observing what people are talking about, right? And then market tone, which means I'm waiting for, okay, it's one thing with positioning and sentiment to be in a certain place, but then I like to see the market actually agree to go opposite that stuff, meaning market tone, where the market should be going up on good news, certainly, and shouldn't really go down on bad news. It means that the market tone is good. And that's what we've had in the stock market really since the lows. We had a nice reversal day on the lows, on what was bad news. And ever since then, we have very robust up days on what is seen as good news, and we fight off bad news very well. So until that stops, and that could stop in a day, but until that stops, we are in a bull market in the stock market. And call me crazy, but I would prefer to be trading from the long side in a bull market than from the short side. And you can sit here and try to pick the day that that bull type of stuff ends, but that's an exercise in futility over time. I continue to see people wanting to short this market, either because the macro guys, it's like if you didn't like the market at 5,000 in the S&P, then you're certainly going to hate it at 5,900, right? So they're continuing to do that. And then I see a big group of people who missed this. This is a classic trading mistake that people make, right? Because they missed this rally, they now need to catch it on the short side, right? Which is just such a classic trading error that I have made in my younger days. And that cost me money, and I learned that way that doesn't work. So I think that's what people are doing here, and
Okay.
we know that the world, because of what happened in April, got very underweight stocks, U.S. stocks, pretty quickly, and then it quickly went in their face, right? And now they remain underweight, and now it's like, what are they going to do? What are they going to do? They're underweight and they're underperforming, so they're stuck. We've got a bear trap going on here, and I think trying to trade that from the short side. And it's not to say there's not going to be down days in the stock market. It's not going to go up every single day.
Yeah.
But trying to fade that, I think, is an error in ways. I think, as I spoke about a little bit last week, if you are looking to pick the turn or try and get the short, at the very least, I would wait until the NASDAQ starts to underperform the other indices, which it is not doing. Even today, it's not doing that. So at the very least, I would wait for that.
I just pulled up an E-mini S&P chart, and just to kind of take a glance at the behavior of the large specs over the last, 5 weeks. And you can see a subtle increase a subtle decrease actually in the net short, the net short position is getting bigger. I got to word that properly.
Yes.
Although we have a little bit of a pause, this last report is kind of pretty much tied with the week before. At the same time, you see this big rally going on. So this might be making your point for you.
Well, it's not making my point for me. I'm making its point. Like I'm reading this stuff, and that's where I'm coming up with my conclusions, right? I'm trying not to guess. I'm trying to look at data. And then on top of the data, yes, I listen to what people are talking about, and I observe what people are doing. I mean, everybody that I see this morning is trying to short the stock market, either trying to short it or not longing it. That's what I'm seeing from everywhere. And does that mean that the market absolutely can't go down? No, nothing means that. Anything can happen, but I would certainly wait, like I say, until some form of market confirmation before I would really try to be shorting this thing. It's just, you're fighting the tape, and fighting the tape over time doesn't work.
Yeah, and just I'm looking at this non-reporting. The net it's net positive. 36,000 was the last print for the non-reporting for the longs, but you don't see that same big histogram bar that you saw when this market was going down. So that's people like to say, well, I want to look at this non-reporting and I want to fade that. In this particular case, you really don't want to fade it, because at this point, even though the net long is a lot less than it was, they're still net long.
Yeah, I mean, the important thing with COT data is you have to index it to some form of look back period, right? Just like an RSI, you're looking at a 30-day RSI, a 90-day RSI, whatever the number is. And if you just even eyeball this, you can see, sure, the yellow, the small speculators are net long, but they're the least net long that they have been, right?
Yeah.
The commercials are net long for the first time. Look how net short they were in March, right? And now they've gone net long, right? So as an indexed number, this becomes very bullish. And truthfully, if you then go across the different markets, you start to see, okay, so this is saying that commercials are long here, the longest they've been in quite a while. You look at things like Bitcoin, right, where specs have sold every single week for the last 4 or 5 weeks. They're selling into the rally, right? So that would indicate Bitcoin has more to the upside. Bitcoin is another risk asset, right? You look at the dollar. We have the most bearish dollar sentiment and the most bearish dollar positioning that we've seen in a very long time. This would indicate that the risk reward means the dollar is going to head higher.
Yeah.
So if the dollar is going to, we're seeing buy dollar, buy Bitcoin, buy stocks. To me, this means overall the risk reward continues to be long risk assets.
Yeah, let me pull up the yen. This is the yen versus the US dollar cross right here. Nice rally in the yen, double top maybe from a weekly chart point of view. A little bit of a retracement back down right now. But these levels have been pretty fierce, right? Commercials are short, 200,000. Large specs are long, 76,000 right now. And that's been a pretty consistent thing for, I don't know, 4 or 5 weeks now.
Right from where the yen topped.
Yeah.
This is a difficult trade. It's definitely a trade that I take 10 times out of 10 because of the positioning. But we do have some strange sort of fundamental stuff going on. Like the yen is up today because there was some talk overnight about conversations between the Bank of Japan and the Bank of Korea and the US, which people are assuming includes the idea of weakening the dollar versus those currencies as part of a trade deal. So if in fact they decide to come out and say that, then this trade is probably going to suffer. Okay. But that's the risk that we take with anything, It's just to me, a risk reward calculation, right? If they come out and say that, I'll probably get stopped out of this trade. If that doesn't happen, then I would assume that the yen is going to go down a lot and I will make a lot. So I'll lose a little, I'll make a lot. That's always what I'm looking to do.
Got it. That makes sense. I just want to toggle over while we're on the currencies. I just want to look at pull up the Euro FX. I haven't pulled this up yet, but it looks pretty similar structurally from a candle point of view, and maybe pretty structurally similar also from a COT point of view.
Yeah, no, it does. It definitely does. And it's the exact opposite. The best trade that I've had to this point this year was back in January, where we were shorting the dollar. The one that I did was the pound, but you could have done it based on COT across euro, pound, Aussie dollar, New Zealand dollar, that they were all crowded back in January. And I know January was a long time ago, but back in January, we had an Economist cover talking about, the unstoppable US dollar, right? Everybody was mega, mega bullish the US dollar. And the US dollar got tanked from January until now. And now we've done a complete 180, both in positioning and in sort of general psychology of what people are feeling about the dollar. And so for me, now's a good time to go the other way.
Yeah. Yeah, I mean, I just threw my January 17th, the week of the January 17th, we had that low print, that low wick right there in the Euro FX, and a little bit of sideways action, but then off to the races to the upside, which hurt my European planned vacation. But now we're settling back down a little bit, so that should be good.
Yes,
Let me do it. I'm going to do at the risk of breaking my chart here. Let me see if I could add. I think we might have some. I'm going to add the Bitcoin. I just usually, I might not be able to get the data on this. Never do something you don't know if it's going to work or not live on air, but I just did. Let's see if we get the COT on here. We might not get it on here. Let's give it a minute. But we can look at the chart. I mean, this, like you said, this is in rally mode. We're getting close to the January highs again. I don't have COT data for the Bitcoin. Is there COT data for the Bitcoin?
There is.
Okay, I gotta work on that. I knew I should have tried that.
I can tell you they started selling at about 5, 6 weeks ago. They've just been selling into this rally the whole way, which we've seen a couple other times. And this is not going to work every single time. But the last time we saw that was right before the election. Bitcoin started to move up from like, I don't know, 60 to 70 or something like that. And the speculators started selling into that rally.
Yeah.
Then we went from, 70 to 108 or whatever very, very quickly. And then they covered, which they would be forced to do in that kind of move. And then we went nowhere. And then we went down. They didn't really do much. And now they are selling into the rally again. So again, it's just
Got it.
kind of like part of the puzzle, right? If that means that there's good risk reward being long Bitcoin, that assumes risk assets are going up. And if we're seeing the same thing in stocks and the same thing in dollar and, across a few different things, it just makes the idea even better.
Yeah. So I just toggled over to gold. I know we talked about this last week, and I just, I was curious, are we still going, are we seeing these histogram bars get, starting to converge or not? We didn't really have much of a change from this week to last week in gold. It's really a loosely fitting trend line here that we got a long way to go before it's important in my mind.
Yeah.
But we do have a little bit of a sell-off going on here. What do you think's going on in gold this week?
I mean, positioning aside, there's really no positioning edge in gold here. So therefore, it's not telling you, which it just means to me, I don't have a trade on there, right? There's nothing for me to do there. But in general, clearly, it's hard. Gold's been a tough one because there are times when it goes up with risk assets as liquidity enters the system. I think that during the April thing, it started to go up as a risk off asset, right? It was panic asset, right? Everyone wanted to get out of risks, and so they were getting into gold as a risk off asset. So I think that's kind of unwinding a little bit as risk on goes back on, as the stock market goes back up. But it hasn't really come down much. It's actually done pretty darn well relative to what the stock market's done, certainly. So I again, I'm not either side on this one. I think that if anything, it might be a good hedge to the trades that I have on to get long gold. I haven't done that. Maybe if I got some kind of market confirmation on it that I would, but I really haven't gotten that. So might be a good hedge to the short to the long dollar thing, but
Yeah.
other than that, I'm not really seeing it as a trade here. Most of the markets that I follow are not in trade mode, at any one time. I have between sometimes 2 and 5 that are, and the rest aren't, and this one just isn't right now.
So then you really don't care what the asset class is, right? You're looking at this data and saying, hey, this could be in silver, this could be in the euro, this could be in equity markets. So you're pretty much not focused on the actual asset class, but the behavior that's happening behind the scenes.
That's right. That's right. I don't care. To me, they all are the same thing. I look at it as I have 37 markets that I'm involved in. I look at it as 37 blackjack tables that I'm counting cards at, and when the one table gets hot, then that's where I'm playing.
We can't call them blackjack tables.
Well, that's kind of how I approach it.
No, I understand. I get the point. Let me just roll over. I have not looked at this market either, but I'm super curious. We've been talking a lot about WTI crude oil market these days. A lot of moving parts here globally with this market, as well as maybe domestically as well. And I'm looking at this for the first time, and it doesn't look like I see a trigger here for you on the COT.
Not a big COT trigger here. I think it's a mixed bag. I mean, I will say that from a market tone point of view, last week was very, very good for energies. We had Sunday OPEC come out and make some pretty bearish comments. The market gapped down Sunday night and went straight up from there. And crude was up like 4% on the back of that. And then there was never any good news. All the inventory news has come out bearish and all that. So from a market tone point of view, I think crude trades very well.
Yeah, no, for sure. For sure. And we learn the whole macro story from Shai every day. She's a genius. So we get a good footing from that. All right, let's shoot. How about the grains? Anything in the grains that might be interesting? I know we've had, in the news, we've had live cattle. It will be interesting to see that chart right here. It's just been exploding um, off the chart. And I do have COT data for this. I don't know if it helps us though directionally.
It will in time. It's not at extreme levels. I only look for market turns at very extreme levels, and we're not there yet. So, if it gets there, then I would be looking to get short that, but I have not done that.
So what level would you consider an extreme here?
Again, you take that data and I
Yeah.
index it. And when that index goes over 95, then that's extreme to me. So right now it's somewhere in the 80s. You can see they were longer even, a couple months ago, right? So it's
Yeah.
not going to show up as extreme. But should it get above 95 on my index level, then yes, I will then be looking for some form of market confirmation to try and get short there.
Yeah. Well, right now, I don't know. I think this was a problem with Mexico importing contaminated cattle or something. I don't know, something like that.
Yes, yeah, that's right. They banned the importation of cattle on over the weekend.
Yeah. Yeah. Let's kind of let's stick with the grains. Wheat's another one that I like. Let's pull this data up. It'll take a second as the gerbils are doing their thing in
Wheat's
my
pretty
PC
interesting. It's
right now.
getting pretty crowded short, as you can see, right?
Yeah.
So yeah, I think that's an interesting one for sure. We did have a WASI report, which is their big report on Monday. It was bearish, but the market went down on that bearishness. So still the market tone is not to where I would want to take it long for me. I need the market to fight off bad news, not go down on bad news. So it didn't do that. So I
Yeah.
think soy meal also is one that we're looking at.
Let's pull that up. Soy meal. That was ZM, I believe. There we go.
So you can see like the blue is getting to where it's historically the large speculators are getting to very short levels.
Right. So just to remind everybody who wasn't here last week, you need to have two confirmations, right? You need to have this extreme levels in the COT, and then you need to have an inverse relationship between price and either good news or bad news, depending if you're going long or short.
Correct. That's how I do my market confirmation. Other people do it other ways,
Yeah.
crosses moving average. It does something else, you know what I mean? But I do it based on what I call a news failure event.
News failure event. Seems like we have a lot of news failure events these days.
Like where?
Well, not by your definition, but just by, with the random noise coming out of uh, Capitol Hill and other places that are just random noise.
Yeah. Yeah. But, it seems like for now, like I say, the good news that comes out of there does cause the market to go up, right? And any kind of bad news related stuff, really, the market holds pretty well. So to me, that's what a bull market is.
Yeah, very awesome. Well, appreciate your time, everybody. You could follow Jason on X, Crowded Market Report. Just type it in. I'll go ahead and cut and paste it in the chat in a second. Good follow. We're going to be doing this every Wednesday, so we'll be looking for key changes in COT and see if we got any clues as to market direction on these major asset classes that we trade every day.
Awesome.
TY says, thanks. Where do you get the COT data? TY, it is native in the NinjaTrader desktop platform. And also you can get a special version of it, the one I'm using. Just send an email to learn at ninjatrader.com and we'll set you up. Learn at ninjatrader.com. We'll send you the zip file as a plugin. It's easy peasy to do. So that's where we're at. So again, Jason, thank you so much. Looking forward to talking to you again next week.
All right, cool, man. Have a good week.
All right. All right, coming up right out of the bat, my second favorite guy in the whole world, Jimmy Iuorio. How are you, Jimmy? I can't hear you yet.
I figured it out. How are you, my friend?
I'm pretty good, man. Long time no chat.
Good. I told you I was in 2 weeks in Italy, right?
You did. You posted a tweet, and you said, or an X, whatever you want to call it, and you said mostly good, but I'll tell you more later. And I never saw the more later, so there's a
Okay, so
little
the more
bad.
later was that it was crowded as hell in both Florence and Rome, like almost deal breaker crowded. Like I still had fun, but it was keeping it from being a great trip. Now, Sorrento was only mildly annoyingly crowded, so Sorrento was fabulous. But if I'm ever going back to Florence or Rome, which I'm sure I am, I'll go in March. What's the difference if it's 55 degrees if all you're doing is walking around seeing stuff, you know?
Yeah,
So
but it's also Jubilee this year,
good
and
point. Right. It's Jubilee this year. And what's that,
yeah,
every 25 years or something?
it's something crazy.
Yeah,
Yeah,
right.
yeah. So we always go in September because what happens in July and August is you have the tourists, the European tourists who take like 6 weeks off, 8 weeks off anyway, and they're out there like, that's where they go, right? They're going
Yep.
to Italy, they're going to Sicily. So we go in September. We're going again in September this year. Can't wait
Nice.
to go.
My month, I think I'm skipping this October, but then like every October or every other October we'll go back. But this time I'll go to Sorrento. I'll stay at one of the vineyards outside of Florence and just go into Florence on day trips instead of going out to the vineyards on day trips. That'll be the way. Nice and relaxing. Yeah.
Yeah, that's
Hey, you
the way
want to
to
talk about
do it.
markets too, or no?
Yeah, sure. We should probably
Yeah,
do
sure.
that.
Why
We
not?
should. We should probably do that. I mean, it's been so long, and we could start from wherever you want. I mean, maybe we'll just start with the equity markets right away. I
Sure.
mean, we're literally in blast off mode. We might, we're only about 4.65% off of the yearly highs based on a continuous daily chart. And if you would have asked me a week ago, are we gonna get there anytime soon? I'd say no, but I don't know. It's looking pretty strong.
Sure. So can you put in the 200-day and the 50-day for me?
Yeah. So I have the moving averages I have right now. These are all Mike Arnold moving
Oh,
averages. So
yeah.
I got the 80 EMA, the 50 EMA, and the 21.
Right.
So
Which,
which
by
ones
the
do you
way, are
want to
the
see?
ones that I use and love, but the 200-day was particularly important in this, I think. So,
All right. Simple, simple.
yeah, simple's fine.
All right. I could do this, man. NinjaTrader software is awesome on the
Look at you
fly.
go.
200. We're gonna do it on price change, and we could make it any color you want, man.
'Cause you call, dealer's choice.
All right. We're gonna make it orange red. I don't know
Good.
why, but we'll do that. Throw it out there. Boom.
Orange would have been the Illini and red would have been Indiana. So it's kind of a compromise.
Why is Indiana? Are you an Indiana guy?
No, you like Indiana, I
Oh,
thought.
yeah, no, my son just graduated there, and I'm done paying him all this out-of-state tuition, so I don't care about him anymore.
Okay, good. All right, good. The hell with Indiana then. Okay, so what I wanted to show is that we eclipsed the 200-day moving average again, and
Yep.
it comes in right at those highs from back in mid-April, right? So
Yep.
relatively close to those highs. I'm not.
Yep.
So here's what I want to see to confirm this bull move. I want to go back down and retest those levels. I want to go back down, plumb those, make sure the foundation is strong before it begins to move higher. Now, I already am halfway to being bullish. I had, I trade a lot of call flies, and going into the movement of the last couple of days, I was long some of the 5,800 calls. Now, for every two of those I sold, I bought the 595 calls. And as it's rallied, I've sold some of the 6,200 calls because that's the highs. And I still think saying that we're just going to shoot to all-time highs might be a bit of a pipe dream. There still is quite a bit to worry about. I still thought that 2025 was going to be tumultuous, and I'm staying with that. But right now, to be bullish on this, which I think this is an interesting trade. I'd love to see it come back down and test that level, reject that level, and then I think it's smooth sailing to the upside. So right now I'm putting on some small bullish trades, but that's when I'll get much more bullish. Does that make sense?
Yeah, let me just make sure I get the levels right, though. A retracement back to the 50 or to the
So either those highs or the 200-day, they're both kind of, by the time it gets there, they're probably going to be a similar level. So what is that? 58,
yeah, that's 58.37. I had that line there before I even talked to you,
yeah.
so
Oh, yeah.
I'm a genius.
I've always said that behind your back. I always say you're a genius. Yeah.
I'm gonna draw a rectangle though, just so I don't forget, because I'm not that much of a genius. All,
Yeah.
all right, there.
So I like
yeah,
that
there we-
level. I would love to see it retested. I'm halfway bullish now. I'd be fully bullish if it retested and then rejected those lows and started heading higher again. So what's the story? Well, the story is that we overreacted. Again, I don't know if you remember this. I did a poll on Twitter and I polled about probably 300 different money managers, and this was in mid-April. And they all said to me the same story. They said that people are selling their stocks that are calling them, but they're selling them because they despise the new administration. It was basically just a symptom of orange man bad, which, by the way, if you're doing your research and you look at policies and say, well, I think these policies are going to be detrimental to the economic condition and potentially the equity markets, and that therefore I'm selling, that's one thing. Selling, just screaming orange man bad and selling to get out of everything, that seems like emotional crap. And that's what I think we saw at those lows. And again, this is not a political discussion, nor do I want it to be. I just think that emotionally selling out your stocks because of things that seem to be non-market related was folly. And I think this move higher has been a function of that, which, by the way, now we've moved higher. So we've taken that all away. I'm not 100% convinced that we're taking out the highs, but we have them in sights right now.
Yeah, but does it freak you out a little bit there's just so many, what seems to be random comments coming out of the White House
Yeah.
that the market just reacts just on a random comment? It's crazy.
It's the craziest thing. At the beginning of this presidency, I said the single most sincere hope I have is that the market doesn't hinge on every word of someone that just says whatever pops into the top of his head. And I did not get that hope realized. We're doing it even more so than ever. Now, here's a theory, Jim, that I'm pretty sure that I'm the only one who has. I'm about to bounce it off you, okay? I hate the fact that crazy, volatile-inducing comments are coming from the highest office in our country. That being said, I think one of the things that leads to bear markets, corrective phases, sharp corrections is complacency and a not a good respect of risk. So regardless of the fact that I hate why we're getting these punches, we are taking punches all the time, which may make the stock market stronger for the long term. If it shakes out these people who are like, just buy, just buy, just buy. No, because Donald Trump can knock you out every once in a while. So I think that could make for a stronger rally once the dust begins to settle. I believe the dust begins to settle after this first year. I think he planned to front load all the radical changes he wanted to make from a very politically astute reason, which is you don't want to get into the second year where you get looking at midterms and you still have what they can describe as chaos. So I think much of the chaotic policy is over, but not all.
Yeah, no, I hear you. Let's pivot. I know you're going to have something to say about gold, so I'm going to.
Oh, good. I was hoping you go to gold next.
Yeah, I'll just throw a daily chart up here. We still have, and the moving average carried over, just so you know.
Right. That's perfect. Okay, so here's what I'm looking at today. This is the thing I'm looking at most today, is we said if the neckline was broken to that double top, which is that red bar right in the middle, which came in at 3209, the one right in the middle of the two upper rows there. So those two highs, the fact that one of them is a wick, I know we're being a little creative with calling it a double top because they seem like they might be out of the range of the two highs, but the one of them was a wick that rejected it. So I'm going to call that a double top. So a settlement below the 3209, which we are clearly below right now. And then any weakness tomorrow, to me, suggests more weakness. I think it goes down to about 3,000, which I think are those lows from those lows down there, about 3,000, right?
Yeah. Yeah.
I need stronger glasses, Jim. Each year, I'm not getting younger anymore, apparently. So I need stronger glasses. So I think that if we settle below the 3209 and then have weakness below this bar tomorrow, then I think we clear the deck for 3,000, which, by the way, the fundamental story of gold has not changed. Central banks are still buying gold. They've bought gold at a level not seen in 75 years, each of the last 3 years. And that's mostly being led by China, Russia, and India. The question becomes, are they going to continue doing that? Probably. We've kind of proved that we're a little bit of an unreliable arbiter of global trade and steward of the world's reserve currency. I mean, again, wherever you stand in the Russia-Ukraine conflict, you have to remember that we unilaterally froze them out of the payment system and froze up all their dollar-denominated assets because we had a horse in the race, which is perfectly fine from a war standpoint, a geopolitical standpoint, but it's not perfectly fine from a stewardship of the world's fiat currency standpoint. And you have to expect global central banks to take steps to move away from having the reserves strictly in dollars and treasuries. Now, that being said, 5 years ago, 60% of the world's reserve currency reserves were held in the US dollar. Now it's only 57. Is 3% a big deal? Well, no, but the direction is somewhat of a big deal. I'm not a big de-dollarization guy, but I think it's significant. You, Jim?
Yeah, you just threw a lot at me at a time.
I got you there, didn't I?
I was like, Poland is like buying a lot of gold too, by the way. I don't know if you saw that. Of all the places, he's like, they're in the top cup 2 or 3 this
Hold, can
last
we
quarter.
still make light bulb changing jokes, or does that, can we not do
Yeah,
that?
well,
Yeah,
we're,
of course you can. We love
you
the
know.
Polish people. I'm from Chicago. I'm surrounded by Polish people. Yes.
Hey, I lived in Elmwood Park for a while, and Deli lived in Melrose Park. So literally, we had a whole big Polish community all around us.
Oh, sure. I'm married to a Polish woman, and I make light bulb changing jokes all the time.
There you go. So I just did a real rough measured move, by the way, from the
Sure.
peak that we saw here on the 7th down to that neckline you mentioned, and I just kind of copied that to make a measured move, just to kind of see how close we were to that 3,000 level you just called out. And look at that, we're at 2970, right at this, right almost by that 200 moving average I just
Right.
added. So that was a good call.
And I know you will believe me when I say this, but many won't. I had that in my calculus too, the measured move as well. That was one of the reasons I said 3,000. I know you believe me. We worked together a long time. I wouldn't say it unless I didn't. Yeah.
Yeah, so we'll see. I mean, today's a big move down. I mean, we're breaking whenever you break through these levels like that have been support for a long period of time.
Yeah.
Then it kind of you raise an eyebrow. We're seeing it in Treasury bonds. Actually, let's go there. Let's go
Yeah,
there next.
please.
We have a ton of time because we're seeing the same thing in Treasury bonds. And I was talking about this with Jason a couple minutes ago. This is a long-term area of support here, and we're just like we're at a 112 half handle.
Yeah. And we can call that a little bit of a head and shoulders pattern, you think, right?
Yeah.
Yeah. So I think
For
that
sure.
it's the same sort of thing as the double top in gold. And I think, and again, it's probably even the same measuring objective if we settle below that gray box today. And then, by the way, so one of the things I look for is a settlement below the gray box and then any sort of weakness tomorrow. And then the measuring objective would be the same as where that peak is in the middle of the head and shoulders pattern.
Yeah.
So
Yeah.
that measuring objective would be down to what?
Let's do it.
Yeah.
I'm just going to eyeball where the neckline is going to be. So I'll just be neckline. It's kind of a weird thing for me.
Yeah.
I never get the neckline right, but I don't think it's all the way down here, is it?
No, I don't
think it's
either. At first I did, but then you're right. It's probably up right around in
It's,
there.
it's going to be horizontal. Yeah.
Yeah.
We need Tom Schneider to tell me what to do here, but
Yeah.
oopsie, my bad. I'm going to copy this real quickly here, guys. And
I
then
wanted you
we'll
to
add
show
it.
off these wonderful tools.
Oh, yeah. There we go.
There you go.
So we're talking a 110 handle again, which we haven't seen since January 15th, I think.
Yep.
I want to say. Yeah, January 14th. That was off a day. But we have seen them this calendar year.
And by the way, did that correspond with about a 4.85 in the 10-year? Do you remember what that did in January, what the rate was?
Oh, I can't remember. I mean, we're tracking 4.95 today.
Yeah. Okay. So yeah, I think that we could head up. By the way, I think there is a spot of yields on the upside, bond prices on the downside, where it becomes the law of diminishing returns because, and this has been my base case for about 2 years. If 10-year yields start to rise precipitously and get to a spot where the government is uncomfortable with that, I do think the Federal Reserve will come back in and start supporting the bond market and reverse QT or begin QE or whatever you want to call it. At the end of the day, it'll be either they're selling less bonds than they're saying they're gonna, or they're gonna buy more bonds. And that's, by the way, when I think that gold weakness will be over. And then I think you want to be long those hard assets. Particularly, by the way, because are we gonna do Bitcoin today too? Because I think Bitcoin's fascinating as well.
We could do the Bitcoin, but let me ask you about
Sure.
the QT thing. I know every time you say something, my brain goes this way.
I'm sorry.
The QT's been they've slowed it down the last
That's correct.
couple of meetings.
That's correct. They've
Right?
slowed it down. And to me, slowing down QT, if we're not expecting it, is just a form of QE. You know what I mean? So at any moment in time, we are assessing the amount of bonds that are to be sold. It's a math equation. And now if all of a sudden it's less bonds being rolled off, being sold, then it's more morphing toward QE. And I know they're not buying it and increasing their balance sheet yet, but they're letting their balance sheet run off at a slower rate. This to me deserves to be watched pretty closely.
Yeah, no, I agree to that 100%. All right, I got the Bitcoin up here. I have the micro Bitcoin, and the volume's a little better, so I think the candles are nicer.
Yeah. So here's, you see the pattern right at the tail end here. We've had two inside bars. I know that today's inside bar isn't completed, which, by the way, Bitcoin is a more difficult thing to do technical analysis on because the actual Bitcoin Cash basically trades 24 hours. I think it does trade 24 hours, 7 days a week. But Let's just look at the futures because the futures do trade quite a bit too. To me, I'll look at this, even if this bar doesn't close inside today, any trade above that, the body of the green candle, that's last candle, any trade above that, I think is a signal of significantly higher highs. And I think this is the move that we take out the highs. Remember why we traded lower. Okay. Institutional adoption had been for years been the story. We traded lower though, basically because the NASDAQ was trading lower. There is a fundamental reason that Bitcoin and NASDAQ traded with such a high correlation. When institutional rooms started taking on Bitcoin as something that they were going to trade, they threw it to the NASDAQ guys because guess what? Those are the guys that were used to wild volatility. So over the years, they've developed this incredibly high correlation. And there's probably other reasons besides that, but that's a significant reason. I would love to see Bitcoin shake that correlation and become the uncorrelated asset that it was billed to us as. And I think it's in the process of doing that. But I think I'm pretty bullish up on Bitcoin. I'm bullish on Bitcoin if it takes out that level from the green candle.
Yeah, I agree with you, man. I mean, what is this the all-time high? No, I can't remember.
Yeah, I think
what the
so.
all-time high was. This
That's
was
the all-time
okay.
high. Yeah.
So we're getting close to that level. I'm just gonna draw another rectangle just to get my head around it. But
Sure.
we're knocking on heaven's door right now, man.
Yeah. And once we clear that, what's to stop us then? There's no there's no price that it should be. There doesn't throw off any return. So it's all just about, I guess you could call it greater fool, or maybe the greater fool is people who aren't buying it at all. I don't know what the answer is. I don't know. I do know this, that in 10 years, my full belief is that Bitcoin will either be $1 million or $0. And and I think even if you believe that there's a 70% chance that it's zero and a 30% chance that it's $1 million, I think it's best to have some exposure to it. And I do. Do you have exposure to Bitcoin?
So no, I don't. And I'm in that camp of why don't I? You know
And
what I
that's
mean?
part of the psychological process, right?
Yeah. I mean, when you see it trading in the 70s, and you're like, okay, this is going to be 50s soon. I'll buy them then. And then all of a sudden it doesn't. It does the opposite. It's the same thing for the folks that are chasing in now, right? The folks that were managing their own portfolio, whether it was passive or not, in the equity markets, they all freaked out and got out instead of just said, hey, I'm going to hold tight. It's coming back. This is a passive portfolio. So it's the same kind of principle here.
Yeah. And so, for me, it's even actually different. When I started buying Bitcoin, probably about 7 years ago, but then I accelerated it significantly when BlackRock came in and wanted to increase their footprint in the space. And my thinking is just you do what BlackRock does and call it a day. So it's so funny is because that's been my single thesis for 3 years. Yet I get asked to speak at Bitcoin conferences like I'm some sort of damn expert. I buy it because BlackRock's buying it. I bought more because the United States government is buying it. Seems pretty simple, and yet it's worked quite well. So I do want to be long it. And if I lose every bit of it, I don't have more than 5% of my investable in Bitcoin. And well, now it's probably slightly more than that. But if I lose all of it, it's not fine, but I can live with that because it is a dollar hedge. It's this, if they are all right, I don't want to be on the sidelines.
Yeah. Well, we have now a fond relationship with a company called Kraken, as you might have heard.
I've heard that that's the case.
we're going to be talking more and more about this on NinjaTrader Lab going forward. That's for sure.
Good. And like I said, supposedly I'm a crypto expert. So put me in, coach.
Oh my God. And I'm going to front run you by just seeing, I'm going to look up what BlackRock does.
Exactly.
All right. Here's what Jimmy's going to tell us.
I'm being a little bit facetious. I do, of the 4 coins that I own, I understand the fundamental differences between the 4. They're all the ones that the CME now has futures on, which is Bitcoin, Ethereum, Solana, and XRP, formerly called Ripple. I don't know why don't call it Ripple anymore. Those are the ones that I still own, and I own them each for individual reasons. The Ethereum blockchain is supposed to be superior. Solana has some characteristics that make it interesting too, and I'm comfortable with that position.
Yeah, no, I'm also comfortable that and I'm going to call it the NinjaTrader army. We're going to get busy in all 4 of those, and you're going to see some volume.
Good, yeah. You want to do copper?
Yeah, Dr. Copper. Let's do it. Holy cats! Look at this.
Yeah.
It ate my fib line. Let me get that out of the way.
So I know you probably see immediately why I'm interested in this chart. You know the way I trade. The trend
Yeah.
line from the top
Yeah.
is kind of in the midst of breaking.
So I'm going to draw.
Go with that
all right.
one. Yeah.
All right. You want me to go here like this?
That one's fine. And you can even go, from the one in the total top. But you see, we see what's happening here, that it seems to be interested in breaking out, right? Okay,
It
probably
sure
not
does.
there yet. We probably got to take out the top of the candle from about 5 bars ago. The red candle from about 5 bars ago,
Yeah,
right in there. Taking out there, then we'll be above those lines, and then I will think it's interesting. Now, what's really fascinating to me in this chart is that we knocked the crap out of copper into early April, and the thesis there is that this trade conflict with China is going to persist, and that it's going to deeply disturb the Chinese economy. Okay, so it turns out that was not as much the case, and that both sides are a little bit more willing to negotiate than they originally had let on. So boom, copper explodes back. So now here we're in this kind of quagmire sideways trade where it's just because they're willing to talk now doesn't mean the Chinese economy is come off the carpet, but it does mean that we're getting perhaps closer and closer to another big round of stimulus in China. I know they did one round, maybe it was a couple months ago, and I might be getting the facts wrong or my time frame's wrong. But I think copper is telling us that right now there is the potential that China starts throwing a bunch more money into their system to try to stimulate things. If that happens, then I think copper could be having the next big leg higher. But I do want to see a settlement above that level with that red candle we just drew in that top wick. And what was that level, Jimmy?
Let me hang on. Let me move this out of the way. This is let's see.
No, not that one. The one below that. The red candle from about 5 candles
this
ago.
guy.
Bingo, that one.
Okay. Yeah, 4 spot 806.
Okay, so 4 spot 81, we'll call it a settlement above there, and then any strength the next day. And I think it's back off to the races to challenge those highs again.
Yeah, that's funny. Tracy would say that this market's coiling tight, ready for a move.
So, and then you look at this and you say to yourself, well, could the move be to the downside? Well, sure it could. So I'm just not prepping for that yet because it seems to me that it's kind of bent on trying to break out to the upside.
Yeah, no, I got it. So, but let's talk about what happens after this 90-day pause turns into another 90-day pause.
Yeah. So kicking the can down the road is something that our markets have shown that they're perfectly comfortable with over the years, right? So I think that we are a lot more short-sighted in some of these markets than we pretend to be. So again, I look at this chart and say, this is where I want to be long it. But if a new set of fundamental circumstances change the price, then I'll certainly be nimble and be willing to change that thesis. But right now it looks like it wants upside.
Yeah. The other thing we're not really talking about is what's going on, with the budget, and spending. The bill that's worked its way out of the House is projecting another $3 trillion in deficit, some crazy number. I don't even, I can't even get my head around it. Is any of that is that an ever matter?
Sure. Well, yeah, sure. It does matter to commodity prices, particularly like this. If we're spending like drunken sailors, like we still are. And by the way, we always joke about how the only time anyone ever talks about deficits and our deficit hawks is when the Democrats are in power and the Republicans squawk about it. But as soon as the Republicans get in power, it seems like they talk about it a little bit, but the actual substance, the actual meat on the bones seems a little lacking. They're not really cutting spending the way guys like you and I would want. Now, as far as that $3 trillion, like when the Ways and Means Committee and the Congressional Budget Office, they refuse to ever admit that lowering taxes has a stimulative effect on the economy. They just don't want to believe that that's the case, and it is the case. So for them saying that extending these tax cuts, yada yada, whatever, puts us another $3 trillion in debt, that is nonsense. I'm not telling you what exactly it does, but it doesn't do that. Of course, it has some sort of stimulative effect. Of course, it could. And if things like other countries or companies are bringing back production here, either to avoid tariffs or because they believe it's pro-growth here, and part of that is the spending. Yeah, we could have a stimulative effect and a big tax receipt windfall. I'm not saying we are, but I'm certainly not saying we're not.
Yeah, I know. Well, even the Senate's looking at this going, what?
Yeah.
So we'll see. We're a long way to go before the sausage is complete, but it's they're making it right now.
Good way to put it. And yes, that is true.
Oh man. All right. So you talked about the dollar briefly. Let's just use the euro as our proxy here for the US dollar. I don't have the dollar index up right now. The euro just took off, right? This calendar year, well, really at the end of the first quarter and then again in the beginning of April. And it boom. I mean, it was just a monster move up. And now we're kind of having what I would call just a regular textbook retracement. But I don't know. I don't know if this is
Okay.
going to be a
Before
complete turnaround
we
or
do
not.
any sort of serious technical analysis of this, let's remind ourselves that 2.5 months before I was going to Italy, the euro rallied 13%, making my trip 13% more expensive. The day I left Italy, the euro broke 4%. Well, in the days following, when I left Italy, it broke 4%. These are the currency gods gathering to punish Jim Uriel. Let's be clear on that. I don't know what I did wrong to them. I thought we were on good terms. Does that make sense so far?
Yeah, and here's my projection for my trip. In September, I'm putting I want to be way, way, way down here,
Bingo.
even
That's a
further
good
down.
projection. Yeah. Okay. So let's talk about first of all, the buy the euro, sell the dollar trade. I thought that was a huge mean reversion for several years of buy dollars, sell the euros. So I think I said that right. So the sell the dollar, buy the euro trade was a huge mean reversion, a huge exit of the trade. I don't really believe that any sort of massive fundamental story changed between the two. And I know that we have not agreed to different trade agreements with Europe. I have a very difficult time thinking that Europe is going to become our arch nemesis in this whole first year of trade talks. So I think that something will get resolved. So neither that's nor here nor there. The euro rally, I believe, was mostly about mean reversion. Now the trade back off is going back toward where it should be. So I actually am somewhat bearish on the euro. What do you think on the euro?
Well, I'm gonna pull a Jimmy on you, Jimmy. Here's my target wick. We take out this target wick right below that 50 EMA at one spot 10. Then I'm gonna start being a lot more bearish on this.
Right,
in this
and I
market
would
today.
then put my target as there's it's right around it's like even money, right? Isn't that where those lows are around par?
Oh wow. Well, that's
Oh no
my
no no
screen
no!
again.
I'm doing it wrong. Yeah, hold on.
Yeah, so I would do this. I'm just going to go and throw some rectangles on here just to
No,
help
I meant
myself out.
108. It's not par. Yeah, I'm running. Yeah, right there. It's
Right,
my
you nailed
stupid
it. Right,
eyes.
right there,
Yeah.
108.
Yeah.
Yeah, that's right. That's right. Where I just drew that. That would be a good target. And look at that. There's your 200 simple. I know it'd be. Well, actually, the market comes down. This 200 simple could definitely just kind of go, flatline.
Yeah, it could easily. And I like where it all links up there. And I like the fact that you'll be getting your dinners a little cheaper in Italy, which by the way, the food in Italy, the restaurants were very, very reasonable, except for the one we went to on the last night, which was totally unreasonable. But you get really solid bottles of wine for $25, really excellent ones. So, well, yeah.
Yeah.
So
No, for
anyway,
sure. I,
yeah.
yeah, I have a secret weapon when I go. Mrs. Kaggs is really good at finding kind of the legitimate mom and pop off the strip restaurants to go to. I don't know how she does it. It's
Yeah.
amazing. But I was like, how'd you find this place? This is really good stuff.
That's all I look for is just neighborhoody, off the beaten path places. We walk and
Yeah.
walk and walk, trying to identify them. And we usually do a pretty good job of it, but yeah, I'd love to have more research on where to find the mom and pops.
Yeah. My last word of advice is pay for the skip the line ticket.
We did, yeah, we did. It was just at the Vatican and at the Forum and the Coliseum. If we didn't have the skip the line ticket, it would have been miserable. It realistically was kind of miserable anyway. I'm not a big sightseer guy, but apparently you got to do that when your wife's first time in Rome. But I was less miserable because of the skip the line.
Yeah.
Yeah.
All right. All right. Well, hey man, how's the podcast going well?
It's going extremely well, and appreciate to you guys for promoting it. It's called the Futures Edge podcast. We routinely are getting, 80, 100,000 views per episode, and we greatly appreciate it. It's called the Futures Edge. It's myself and Bob Iacchino, and we talk about our ninja friends on there quite a bit, and sometimes we have them on.
Yeah, no, we appreciate that. Yeah, we had I think Bobby is with Shy right now on Market Drop or something.
Oh,
like
good.
that.
Good.
Yeah.
Yeah.
So all really good. All right, and then of course to follow you on X, it's just your name, right?
It's just at Jim Iuorio. I will irritate you on occasion. If you can live with that, please follow me on X.
Yeah. And by the way, I listened to your episode with Dan and Amy that you had. I don't know, it was a couple weeks ago.
Yeah. You dig it?
Yeah. I miss them because I used to listen to that when I was commuting into work, and
Yeah.
now I don't get it because I'm down here in Charleston. So yeah, it was good.
That's awesome. Well, good. Thank you. Yeah.
All right, all right. Thanks, Jimmy. Appreciate you. Everybody, thanks for being here with us this morning, NinjaTrader Live. We had a great session with a lot of great folks, including my friend Jimmy right there. So thank you. We're going to be back at 2:30. We're going to do a hot commodities report, and then we're going to have the order flow labs guys coming in. I do believe we have an inline adjustment for that. We have Nick and XYZ are going to be trading the close. It'll great combination of folks. Can't wait for that. So in the meantime, folks, have a great lunch. Take some time off. We'll see you this afternoon.